Good morning. Welcome to the August 13th all-committee meeting at OPPD. Notice of the time and place of these committee meetings was publicized by notifying the area's news media, by updating the OPPD website, and by emailing such notices to each of the district directors on August 9th, 2019. Today we're going to hear the following reports: finance from Tim Gay, systems management and nuclear oversight from Rick Yoder, governance from Mike Kavanaugh, and public information from Craig Moody. And now I'll ask Mr. Tim Burke to give the safety brief.
Great, thank you very much. You're here on the 9th floor on the west side of Energy Plaza. Where are we at anyway? So there are fire extinguishers in this room. There's one right behind me here, also down at the end of the hallway. The AD and the first aid kit are on the wall near the elevators, one on top of each other. Is anybody here certified in the use of an AED or in CPR? So those that haven't raised their hand, we're going to send you an invite to something to attend the training. There are two exits to this room right behind me in the back of the room. If we need to exit this room and exit the building, we'll exit on the 17th Street side. We'll go down the steps. In the event of a fire, we would use the steps, not the elevator. If we need to exit for other reasons, we could use the elevator and exit out of this building. In case of severe weather, we'll be directed to a secure area within this building or in the garage, and our security team will direct us in that regard. If you have a medical condition, please write it down or tell your neighbor. And in case of emergency, Rod, can I have you call 911 in the event that we need it? Very good. I appreciate that. Thank you very much. And that concludes my safety briefing.
Okay, thank you. Good morning, Rod. Next, we're going to have the Finance Pre-Committee meeting, authorization to issue debt, I think is first. Mr. Gay?
Yeah, we did have a Finance Pre-Committee meeting on the 8th, and Director Omaha was there, Director McGuire, Director Wagner, and myself. Had a good meeting. A couple of things we did discuss there that aren't on today's agenda, though, was at last month's meeting, environmental sustainability investments options, and we kind of discussed that where we decided to go, let's get some more information. Is there anybody doing that? Other options we may have. So down the road, I don't know when, we'll get some more information back on that. So, but I thought it was a good discussion. If anyone wants to add to it, but that's we're looking into it to see if there's an option out there or not. We don't know. So Javier and his team will be looking into that for us and getting back with us. Another thing we did get was a quarterly financial review draft that was very well done, and it really kind of summed up, you know, we get the monthly reports here, as we're going to have here in a minute, but then it kind of summarized it into a quarterly review, which is very informative, I thought. Very well done. I'd say, Javier, that's I don't know if it's a work in progress. It looked pretty good to us, but but anyway, that's something you'll probably be seeing, hopefully. But his group did just a great job with that.
The big advantage is that quarterly you could sort of see where the action items,
big picture,
things that we pay for, and as far as a corporate operating plan, you can actually see the corporate operating plan in place and moving and see how it works as a whole. So it was very good, and we look forward to the final.
Exactly.
Exactly.
Yeah, I mean, I think you get a better picture of what we're doing because month to month, you know, we're kind of looking back a little bit. This helps us talk about the future as well. Cool. So, all right, with that though, we have a few reporting items here and then one action item that we're going to have on Thursday. I'll turn it over to Javier to walk us through the July financials. Javier, you want to?
Yes, thank you very much. Good morning, everyone.
Good morning.
I'll reflect just before I go into the financial report for July. I'll reflect quickly on the quarterly report that Director Gay just mentioned. There are a couple of things that we're still trying to get decisions on, and as Director Gay mentioned, this is a draft report. It is not for consumption yet. We have to work with our bond counsel and legal counsel on the adequacy of the information we're presenting in the quarterly report, and how does that constitute official financial reporting for the Municipal Securities Rulemaking Board and all of that. So for now, it's available to you on as a draft form, and in the near future, we'll figure out how do we make this official and public so that it's also available for investors through the MSRB. So that's yet to be decided and figure out all the legal details. And the other piece is, what are we going to do with the monthly reporting? And this is another item that I committed to bringing back to the Finance Committee, which is, as we move to the quarterly reporting, what are we going to do with the monthly reports? Are we going to continue with them as they are? Is there a better, more streamlined way of presenting monthly financial information, maybe through a dashboard or a series of metrics that the board can still get monthly financial information, but wait for the quarterly to have this longer lead time to tell a better story, to really see the corporate operating plan playing itself. So those are pending items that I committed to bringing back to the Finance Committee in the next month or so to continue discussing.
Javier, one thing on that too. We did discuss that whatever we end up doing, or proper way, you got what you can disclose, can't legally and all that. But one of the main things we want to do is make sure the ratepayers who want to see what's going on are still going to get a good view of this. So it's not like they'll have more information actually.
They'll have more
It's just
information.
what will they see.
We just have to be careful because we don't get quarterly audits of our financials. We get an annual audit of our financials, and that's obviously the information that we post publicly to investors. So as we handle quarterly information, it's important for us to make sure that legally we know exactly what type of information we make available to investors, even if it's not audited. Are there any issues with the audited piece of financial statements? But nothing that we cannot overcome. Okay, so with that, I'll move on to the July financial report. Retail revenues for July were $105.3 million, which is $8.1 million under budget. Two items I would like to note here is the second part of July was a relatively cool month. We started off with a warm and humid month, and then the last 2 weeks were nowhere near where the historic temperatures or humidity has been. The other piece here is goes back to the quarterly report. We have this thing called unbilled accruals, where we have to guess. I'm going to make these very, very high level, but we have to guess how much energy consumption was we had from the second half of the month to the last part of the month, calibrated with the previous month, and figure out how much sales and revenues we're getting, because we're not getting daily reads of all of our meters, right? And so we had a negative impact to our revenues because of the unbilled accruals. If we had a quarterly report, these wouldn't be an issue, because you would have a month where you have a negative number, the following month you have a positive number, and they all cancel each other out, and you can see the trend. But this is also contributing to the negative $8.1 million under budget for retail revenues. Off-system sales revenues were $12.3 million, which was only $2.9 million over budget. And when I say only, it's important to know that on item C, you have fuel and purchase power expenses for July were $30.43 million, which was $5.8 million over budget. So when compared to budget, we bought more, or we spend more money buying power than the money we recovered selling power in the market. So not a positive month from a revenue perspective for the district, which is unusual because we typically wait for July and August to be the good positive months, and July was certainly not a strong month revenue-wise. Other income for July, I want to point out that in the previous months we've been reporting other income going up above budget. This has to do with our interest rates, with the mark-to-market of our securities. As interest rates continue to decline, the value of our securities has gone up on paper, not on cash, on paper. July was an interesting month where interest rates stabilized for a little while. The Federal Reserve Board came in at the end of the month and they cut rates, and now we've been seeing rates continue to decline now in August. But for the month of July, it was pretty stable. So you can see here that other income for July was pretty much at budget, only $700,000 under budget. So we didn't see the mark-to-market effect in July. I anticipate if interest rates continue their trend for the rest of August, that we will see these trend resume in August for a mark-to-market effect of our securities. Now, on the bright side, from an operations and maintenance expenses, we continue to operate really well. I'm very proud of the organization. Operating and maintenance expenses for July were $27.7 million, which was $2.9 million under budget. As the teams continue to work together with their business partners, making sure that we're hitting our budgets and that we're trying to find ways to save money, to do more with less. This is, to me, a good indication that we continue to achieve those savings on our operating and maintenance expenses. I already talked about fuel and purchase power expenses, which were higher than budget. Other expenses for July were $34.3 million, which again, on the nose, $300,000 over budget, very close. We are, I think, the organization continues to show that we're good stewards, financial stewards of our ratepayers' dollars. Net income for July was $27.1 million, which is $9.1 million under budget for the month of July. For the year, year to date, net income is $49.8 million, which is $2.1 million over budget. I will remind you that those $2.1 million over budget includes the non-cash effect of our mark-to-market securities. So when you subtract that out, net income for the year or operating income for the year is under budget. The market has not been favorable to us, and neither has been the weather. Capital expenditures for July were $13.3 million, which is $3.3 million under budget. As you remember, this is the same story that we've been telling for the past few months. The ground is still wet, not ideal building construction conditions. We are making progress. We are ordering parts and big components of capital projects, and those are coming in now in the summer months. We expect construction to continue through the summer and capital expenditures to continue to go through. However, through the year, we are a little bit over $30 million of underspent in capital. Again, if you don't hit that construction season early, which we didn't because of the flood, then the rest of the capital program suffers for the rest of the year. We're trying to figure out how can we advance projects, what other projects we could advance that were planned for next year that we could bring in this year that may not need favorable ground conditions for us to build. So it's a dynamic process with the capital prioritization team. The unrestricted cash balance at the end of July was $355.6 million. This mimics a little bit of the story of lower revenues, higher purchase power. So in this case, from a cash perspective, our cash position is $43.5 million under budget. Part of it is really the operations that we've had for the first half of the year. Not a great year revenue-wise or purchase power-wise. The other one is just temporary cash effects between accounts receivable and accounts payable that you see month over month. When you see these on a quarterly basis, you shouldn't see those big swings as our cash positions are smoothed out over a quarter more than month over month. So I would say if I were to summarize these, we're doing well on all the items that we can control. The district is doing phenomenally well on operating and maintenance expenses and other expenses. Not a great year revenue-wise, temperature-wise, markets, and then the flood. But that is delaying some of our capital expenditures. So I would say proceed with caution. We'll wait for the month of August to end, see how we ended up the summer, and I should be able to give you a better idea of where we're going to end the year at the September board meeting, September or October board meeting, depending on those revenues.
All right.
Any questions?
Not on this per se. You did talk about interest rates and how they're trending. If they continue to trend downward, does that give us an opportunity for changing for refinancing?
I'm going to talk about that in
Oh, yeah, that's right.
That's
four
on
items.
the- that's on the
That's the
schedule.
last one.
Sorry,
You're a soothsayer.
no, I'm not. I saw it and I forgot it. So you planted the seed, thank you.
We're making lemonade out of lemons.
So, not a question, but just a comment, and we've talked about this a couple times in the past, that cooler weather leads to less use, which leads to lower revenues for the district. But on the other side, higher weather is more use and higher expenses for the customer owners of the utility. And I guess I don't know, I don't have a specific comment here, just that those interests are not necessarily always exactly aligned. And I want to make sure that we keep in mind recognizing that our responsibility is to the customer owners. And so when the revenues are down, I mean, we frame that as that's a challenge to the operations of the district, and I understand that. But when revenues are up, it's because there were higher bills for the customer owners as the people who are consuming the energy. And I know we've talked about this before. I don't have a great point here, other than those interests are challenging to keep in mind, and make sure that we're expressing to the customer owners that even though we say lower temperatures, low revenue, not a great month, but that doesn't necessarily mean that by having customer owners save money through lower energy bills, that is not a positive outcome. And I don't have another
Okay.
No, I appreciate
more
your-
specific point.
yeah,
but-
Here's,
Yeah, I appreciate your thought on this. I think as we think
Right.
about when we put together, and these are all relative to, as we put together a budget for the year, we normalize revenue based on normalized weather, right? Whatever that normalization is. So when there's deviations of that, I think what we speak to are just what the deviations are driven by. Warmer, cooler, whatever that may be. We understand the customer impacts to that, but as we're presenting on the financial side, we want to share with you kind of the specifics on kind of how we are looking at the operations. And as those, if we had a much cooler year than we're even having today, what we would share with you are maybe some things very specifically we would have to do to make sure that we're still meeting our financial commitment and obligations, right? To the bondholders, to the organization, and to you, the board, who approved the budget and are getting an update on the financial update. So
Yes.
we really appreciate that. I don't think, I would say, this is how I normally say it, I just want a normal year. I don't want anything too hot, I don't want anything too cold, I don't want anything in between. We do understand the impact to our customers. Our customer call center certainly gets the impact of that as we talk with customers on that. So
another thing to consider, this is controversial, but if we had a rate structure that truly mimicked the cost of the variable cost of that energy, these wouldn't be an issue. You have a cooler year, less energy is produced, consumed, we adjust, no problem. The issue here is that such a large portion of our bill is still on the volumetric side, and that volumetric revenue is paying for a big portion of our fixed costs. That when you have a cool year like this year and revenues go down, we still have to recover for all of those fixed costs. We still have to have turbines that are spinning in case the weather goes the other way around, and we need that power. So it is that's really causing this issue.
Right. And so I guess the reason I mention now is that we're going to come to the PI committee where we talk about customer satisfaction and long-term investigation into rates. And so recognizing how we have rates that accurately reflect viewing the benefits of efficiency, so that lower use by customer owners does not necessarily cause financial concern for the district. Just keeping those things in mind and how those interests are aligned, as you said, Tim, that is something really important. And I know we've talked about this before, but it is something I want to make sure that we make it clear to the customer owners. We have this in mind, and I think President Burke made a good point about that. And so I'm sorry, I don't want to keep bringing it up every time we say, it's a cool month, lower revenue, but.
Well,
Yeah, well, I wanna-
if I could, I don't think you should apologize. So don't say.
No, I don't, no,
I didn't hear him apologize, but that's okay.
Only that it's, this
You
is
should
what number.
apologize, but at the same time, Javier did make a big, that service charge that we have that everybody is very, very upset about, that actually is what is helping stabilize it a little bit. If we didn't have that, then we would have been in a lot bigger trouble. And which would have gone to maybe a rate increase that we would need. So the whole discussion about this and what is equitable and not equitable, and as far as what our fixed costs are, $70 out of the 100. You know, and we're charging the exact opposite as far as fixed cost. And
To that
our
point.
energy services are, you know, helping our fixed cost right now, our energy charges. It's a conundrum.
It is.
It's a wicked problem.
It's
So-
a wicked problem.
So to
I
that,
like that.
to that point, the fixed costs and needing needing the blades to spin all the time, it's the reason I think you should bring it up, and we should always be mindful of it, which we are, but vocalizing it is another matter, is this whole strategic initiative that's coming up. If we can reduce some of those fixed costs over time, and I don't know if you can. So, but technologies might allow you to do that. We'll see. And that's what I'm hoping to see out of that study.
I don't know which strategic initiative you're referring
I don't
to.
either.
The decarbonization.
Yes, you're about to hear these later in a couple of weeks, the other strategic initiative on reliability and resilience. So in order for us to
Those are
keep
fixed
that,
costs.
the technology may change, the type of machinery will change, the type of fuel will change, the commitment to reliability won't, right? So I'm hopeful that those costs will continue to go down, but I don't think we can ever get away from providing that reliability and charging for that reliability, for that demand that is always going to be there from our customers. We may provide it with different technology that may be more efficient, but I want to make it clear, I don't think that's going to go away.
Yeah.
We'll
The other
replace it
thing-
with something else.
Yeah, the other thing then that's not gonna go away is a responsibility to our employees and our retirees as far as pension and as far as healthcare, which are costs that in some ways are going up as far as the healthcare.
Yeah.
But your point, Director, is very well taken. We're always looking for ways to make this more efficient, with whatever technology we have, and pass those savings to our customer owners. Ultimately, this is a consumer-owned organization. We owe these to our customer owners, and our interests are very much aligned with our customer owners.
Yeah. Anyway, on, moving ahead, just one thing on that, and I've said this before, it's tough. When you're you gotta be the business board of directors, but also be the regulator at the same time, because the unique system we're in here in Nebraska.
Yes, it
Yeah, you're
is.
gonna get these things, but I think everyone is always say, hey, how are we helping the ratepayer? But yet we have that responsibility of the company, but it's a interesting balance, that's for sure. But, so, good to bring that up. If there's nothing else then, we'll go to the interest rates. You wanna talk about customer interest rates?
This is an annual report that we provide every year. We, from time to time, collect deposits from customers for a variety of reasons and programs, and we hold those monies in our accounts. These are customer-owned monies that eventually get reimbursed back to the customer. During the time that we own or that we keep those funds in the district, that money earns interest, and it has always been has for many years been our policy to give credit back to customers for the interest earned on those funds while we have those funds here. We have a formula where we say we average the interest rate that we earned the previous year, and we calculate 90% of that interest rate goes back to the customer, and we round it up or down by the nearest 1/4%. So every year, over a long period of time, we're basically giving back to customers exactly what we earned. The rate for 2018 that has been in effect since September 1 of 2018 was 1.25%, 1.25%. Since then, interest rates, short-term interest rates went up, and today the approved formula provides an interest rate of 2%. So that 2% credit on funds will be applied to customer security deposits beginning September 1, 2019. Come next year, we'll give you another update and see what interest rates have done, but for the next year, it's going to be 2%.
That's good.
So it was good, but now it's down again. So,
Right.
this is better than what you can get now.
You ballpark, how much would be in that account, just ballpark, and it varies every
It's
day,
about,
I'm sure.
just a minute, I just have it.
Just ballpark.
It's in the 70 million range.
Yeah, it's a chunk of money.
This year is a little bit larger because we have some large customers who have deposited funds during large construction, but typically for regular, for other customers, it's much lower than that.
For a normal service deposit, it's in the, so the 75 was out of context. We have about 60,000 residential service deposits, and those represent about $15 million. And then we have commercials of about 7.5 million.
And then again, I know this varies for every, but is there an average, like a residential deposit, you put it down and then
It's around
get it paid
200,
back over?
Yes. The residential deposits are set at $200 initially. And then if someone has a higher bill and isn't paying on time, you may assess additional deposit in $100 increments. And the commercial one is slightly above that, but not a whole lot,
Okay.
on average.
But you can waive that residential deposit if you do.
Correct, so
Automatic
we do have ways
withdrawal.
for them to waive it. They can do the automatic bill payment, so have it be a direct debit out of their checking account every month, so we'll waive the deposit if they sign up for that, and that's been a really effective tool for customers to avoid the deposit. They can also get a letter of guarantee from somebody else who's a customer in good standing, signing that they'll cover
Right.
the account.
Yep.
Yeah.
Okay, any questions on that? Any other questions? All right.
Okay, the next one is legal fees and expense reports for the second quarter of 2019. Legal fees and expenses paid to General Counsel Fraser Stryker totaled $402,000, including services provided for contracts, regulatory transmission issues, environmental regulations, and all the good work that Fraser Stryker typically does for us. Last quarter, last year, same quarter, that same law firm received $426,000. So this was a reduction from last year, but it's very much in line with what we've seen in the past. Legal fees and expenses paid through Special Counsel GKG Law total $20,000, $20,555. We didn't have that expense last year, and we had this one because it's related to rail transportation, and it's a very unique type of consulting that happens every so often depending on the operations of the district. Legal fees and expenses paid to Special Counsel Pillsbury, Winthrop, Shaw, and Pittman totaled $18,486.42. That was a little higher than last year. Last year, the same quarter was $8,000. This is for related to nuclear waste. As activities continue to pick up, there's more work there. It aligns with the work that we're doing. And lastly, legal fees and expenses paid to Special Counsel Troutman Sanders totaled $12,939 for item related to FERC monitoring and counseling. That same firm, same services last year, same quarter was $9,447. So a little bit higher, but pretty much very much in alignment with what we've seen in the past. So I've reviewed these and have no issues reporting these to the board.
Yep. Okay, and then also the department heads or senior managers review those as well before they can do this. So on those specialized bills, that's why, because they are specialized, so.
Right,
I'm
so
saying that's not for you guys, but.
I
for
take
the public.
comfort in that my colleagues in senior management and their direct reports are all reviewing, and all of this is charged, and they are reporting it back to us. So
Right.
there's accountability. I'm not an
Right.
expert on nuclear waste. There's a lot of people who
Yeah.
know how to do that. And, but I look at the overall hourly billing, number of hours, trend, context, and it makes sense with the work that we're doing.
All right. Any other questions on that?
Nope.
Nope. All right.
Next item, retirement plan, second quarter of 2019. If you read the news this morning or yesterday, you may be wondering what's going on with the economy, and I'm wondering exactly the same thing. This report is as of June 30th, so it's stale. But what it shows here is that the retirement plan fund market value at the end of the second quarter was a little bit over $1 billion. If you remember, we were above $1 billion last year. At the end of the year, it dipped below. We're back above $1 billion. We've been getting good returns. We started the quarter at $992 million. That's as of April 1st. As of June 30th, we had $1.01 billion. You can see the As of June 30th, also, the composition of the plan was 53% equity, 40.7% fixed income, and 6.3% alternative assets, which is very well within the investment policy that we've set for the district. You can see the table. The total quarterly return for our entire plan was 2.9%. The index that we used to compare ourselves was at 3%. So in line with the index, in line with the type of risk profile that we've chosen for the plan. So it's doing well. Something that's not on your report, but I want to just point out because of what's happening in the news yesterday and today, and the stock market going down and then going back up today. To date, Dow Jones performance year to date, it's a little bit over 12% positive. Last year, same time of the year, it was only 3%, a little bit over 3%. 2017, same thing, it was a little bit over 10%. So 17, 18, 19, in 2019, we're doing significantly better than in the previous years, partly because we started in such a low point in January that it would be hard for us to do much worse, although weird things can
Let's
happen.
hope we don't get there at the end
So,
of the
but
year.
I think context is important. When you see those ups and downs,
Yeah.
year to date, we're doing okay, I would say, from an equities perspective. This is not a promise or anything that's going to happen in the future. It's just a report as of like half an hour ago.
And as far as our managers, do we have no one on watch or anything like that at the moment, or do we have someone on watch?
No, we don't have anyone on watch.
Okay.
The last time we met was a couple months ago, and we didn't have anyone on watch. Everyone is performing as expected. Even the newer funds are now starting to perform the way we expected. And we have a meeting here at the end of August. So in a couple of weeks, we'll have a meeting. We'll have some of our managers come to town. We'll get an update.
On that meeting board members can attend but not speak. And- Yeah, I mean, you
We
you
invite
get
the
there,
finance
so-
committee
ask a
to
question.
attend. It's not required.
Well,
You can
I
ask
suppose
questions.
could,
If
but
they
you
don't
don't get to
vote,
make any decisions.
They don't vote, no.
They kind of know what they're doing.
Director
but yeah.
Molhoff attended, I think, last
Yeah.
time.
Yeah.
Yeah.
You're more than welcome.
Janice
It's,
had it.
it's a
It's a good thing if
5-hour engagement.
you don't have to be there the entire time.
Yeah. You
don't have to
get
be
an
there the
idea
entire time.
Part of the time, it's a good learning
We'll provide
experience. yeah.
coffee.
Could be kind of interesting.
Lots of coffee.
And a stack of paper.
A lot of
That's,
people.
that's right.
Any questions on that?
Okay. The last item I have, this is going to be a board action item on Thursday, where we will ask the board to consider the approval of a resolution. This is, in a nutshell, I don't have a presentation. I made a presentation a little bit more detailed on Thursday to the Finance Committee. This is virtually the same construct and the same transaction that we entered into about a year ago, where the district has healthy liquidity levels, and that cash can be and should be put to good use from time to time. And this is one of those times where we have debt, fixed rate debt that is callable in 2021 and 2022, where we have an opportunity to set aside some of the cash we have on hand and fund an escrow to pay off that outstanding debt. This is cash that we have from operations that we are going to use to pay for, to defease that debt. 15 days after we pay off those bonds, we will consider entering into the market and issuing new debt to finance new capital construction that we've incurred in the past 12 months or so. Virtually replacing the cash that we used to defease the old debt. So these are two separate transactions, but they are somewhat related from a liquidity perspective. We know that we're using some cash to pay off debt, and we have the opportunity to reimburse the district for new capital construction, issuing new debt at lower interest rates. Effectively, at the end of this process, we will end up with the same amount or lower. In fact, this is what the plan is, for us to have a lower debt service for the district by executing these two transactions. As we mentioned last year, this does not come without risk. The risks that we discussed at length with the Finance Committee was we can use our cash, we can pay off debt and 15 days later, interest rates could go up. And it may not be advantageous for the district to issue new debt, because we may end up issuing debt that's more expensive than the one that we had before. At that point, we're not committed to issuing debt. We would not issue debt. We would probably wait until the interest rates are favorable. But we would have a lower cash position for a longer period of time, because we wouldn't have that debt. Something very, very important to remind everyone is that in any event, that cash would have been used to pay off existing debt. So that cash is not lost, it's put to good use. What suffers could be potentially the liquidity position for the district that could be lower for more than 15 days. We believe we've done a lot of stochastic analysis. We believe that the probability of that happening is really small, but it's still a probability, so I want to be transparent and forward. We believe that the resolution that we'll put in front of you on Thursday would authorize management to sell up to $200 million of this new debt between now and the end of next year. Based on current market conditions, we believe that that amount would be probably in the $115, $120 million range. We have asked for a little bit more, just to give us that option that if market conditions are favorable, we can take advantage of that. But the commitment here would be that this would be not to add to our debt portfolio, but rather to keep it the same or lower our debt service payments. It's virtually the same process that we went through last year. So with that, I'll answer any questions that you may have.
Can you explain two things we looked at, the different, so we did look at the risk scenarios as they change, as interest rate fluctuations could happen, and they were all pretty positive unless something major would happen.
That would be like a
That'd be
catastrophic.
And then
type
can you
thing.
talk about, a little bit about if you were gonna do this again in the future, you're looking for a certain ratio. Can you explain that? You have some kind of,
You had a
it had to
ratio,
meet a
right,
certain
for
criteria.
risk.
Right,
To
so-
make
Risk
sure it covers
tolerance.
all our expenses.
Great point. So
those
we
things.
have, this is not a refinancing, technically, this is not a refunding, right? We're paying debt off with operating cash, and we're issuing new debt as separate transactions. However, we consider it from a governance perspective, we're applying the same rigor and the same discipline as we would have applied to any other refinancings that we've done in the past. The district has two thresholds. Before we enter into a refinancing, we want to make sure that the savings generated are at least 5%. The net present value of those savings are at least 5% of the par amount of bonds issued, so that it's worth it, because there's costs associated and there's a lot of hours associated with these. We want to make sure that when we do one of these, it's worth the time and the effort and all the costs. In all of these cases that our team ran, those savings are well in excess of 9%. In some cases, they get up all the way up to 12%, so significantly higher than the 5% threshold we have. The other one is we have an escrow efficiency threshold of at least 60%. That escrow has to be at least 60% efficient. And I'm going to spare you with the details of this escrow efficiency unless you want me to get into that. But the money we set aside has to be at least 60% efficient to pay the bonds that we have. In this case, with interest rates the way they are, that escrow efficiency is in the 98%, 96 to 98%, so very efficient escrow. So from both perspectives, we are far exceeding the thresholds that we typically would have had for refundings.
The other thing that I thought was important in this whole transaction analysis is that the cash balance, the board has set a threshold for that. And so the cash that we're putting into this escrow account won't bring our cash balance below the level that the board has set. And so I think that's important to know that the board is directing how much cash balance we have to have, and this wouldn't affect that at all. So
That is correct.
that's important.
That is correct. And it is something that we communicate with the rating agencies, because they look at these and say, hey, what happened to your cash balances? What happened to your liquidity? And we present the whole packet. And as long as they understand it and we execute on it, they have seemed to be pleased with it.
And did we decide, this is an action item we'll be voting on, but did we decide I think I brought
This is an
up.
action item, not a consent item.
Yeah, okay, that's what I was gonna bring up. So
We're taking it
Javier,
off consent? It's on consent now.
It should be, to me, it's
I
just,
now a think-
discussion item.
it's a discussion item of consent.
yeah,
It's not consent.
because, and we want him to go through this presentation again publicly.
Great.
At
Yeah.
the
Yeah, I remember
Anything-
that.
Anything that
It's-
is,
It deals with
To be
ratepayer
brought should
dollars,
be
which everything
definitely-
does. Everything does.
Something slightly different that's gonna happen this Thursday, and I'm looking at Mr. Bruckner here, is in the past, we've had to
Oh.
read these really long resolutions that have pages and pages and appendices and really long part of the board process. We've been trying to streamline these, and so there's gonna be a shorter form of a resolution, and that we're asking the board, you have the full resolution on your diligent. We're asking you to read it, get familiar with the resolution so that we can have these more streamlined process.
So kind of like wave it.
It's really not a lack of transparency, it's really to make the board meeting a little bit more.
Yeah, is that available today, right now?
I have a draft of the script. We'll review it after this meeting.
Okay.
And we'll post it in diligent.
Great,
yeah,
thank you.
along with
And then
everything else.
the full resolution will still be available for the public on the, on the
Part of the
website.
board packet, for sure,
Yeah.
for sure.
Yeah.
There was a
on
time,
the
many
website.
years ago, I don't know if this is true or not, but there's this rumor that at some point we used to even read the whole official statement. So this is hours and hours of reading.
Just start in the morning
It had
and
been threatened to, but I don't know.
Yeah, so we're
Yeah, as long as I've been around, they
It's
always.
folklore.
They always
It's
have.
folklore.
Might be
Yeah.
full.
Yeah,
But
I don't
anyway,
remember it
we're
being-
trying to make the board meetings more useful and
But it
Yeah.
could be a useful
relevant.
tactic.
Yeah.
I think that's how it was
To bore everyone
officially
to death?
read. It was a tactic by a board member
To demand it.
30 years ago is what I understand.
To demand it, yeah. That was quite a.
well, just a
group of
regular
people.
resolution is something.
No.
Also, Javier will not be there on Thursday to be able to do that, so I believe Mr. Thurber will be doing the explanation
Oh,
of what
okay.
that occurred. Javier has an employee that's going to be part of Leadership Omaha,
Oh, good.
and the kickoff is that
Yeah.
night, so we
It's
want him
Laura
to make
Langford,
sure he
right.
provides that role as well.
John will do a good job.
Yeah, and we
Absolutely.
can make an aside to that, heads up to Laura Langford for that, that's, congratulations to her.
All right, any other questions on this one?
I just wanted to make one more comment, is that during our meeting, a pre-committee meeting, Barclays was on there, our advisor was there,
Oh.
that we do have an external advisor on this that did help us with this,
very, very helpful, very
Yes.
instrumental in us
yes.
arriving to this conclusion.
Okay, that's it for finance.
Okay, next we have system management, Mr. Yoder.
Thank you very much. As you can see on diligent and perhaps in the written packet as well, there were two items at the pre-committee meeting on Friday morning at 7:30. We talked about the last action item, the Nebraska City Station Unit 1 turbine reliability, rotors, and we talked about SD7. The SD7 discussion was basically thematic still and trying to figure out where we're going with that. I don't think that's changed too much from the one-on-one discussions I've had with people. Generally, I think there's a good working relationship between management and board members on this. The themes are prevention, waste reduction as the first element. The waste not, want not kind of thing that we all do as part of the public domain in any case. I think we're just trying to craft a strategy that says, just like we do with safety, just like we do with health, first do no harm in the environmental impact as well. The second one, the second theme is to help to provide a backstop at the board level on the decarbonization initiative. And we've talked about, and this is where the discussion is still ongoing, what is the correct language to put in place in an SD? I personally am excited about the zero net carbon concept. The dates and the exact progression of getting from where we are to zero net carbon are obviously going to be where the bulk of the conversation happens. I like the idea. I think I first heard it proposed by Director Mulhoff because it offers, in carbon sequestration, it offers economic development among rural areas, especially landowners. I'm happy about that. And then the third one is really providing proof of the excellence that OPPD does. It's doing some benchmarking and reporting of all the emissions that we have against a peer group of utilities. There are other organizations which do this. I think just much like we have done with our rates and said, here's the area we want to compare ourselves to. That's what we're trying to do for all of the emissions that we have. And so that's where that discussion lies. Other members of the committee, any conversation on that? Other members? I think we're going to...
That's a discussion we can have at the retreat.
I'm expecting that we will talk about this at the retreat.
Yeah.
Yeah, absolutely. And I think that's, and then we had a discussion on the Nebraska City Station 1, and I'll wait till we get through the reporting items here, but to talk about it further as the board, as the whole, committee as a whole. So with that, there are many action items here. I think they're all on the consent agenda. And then one last reporting item at the end, but let's go ahead and start from the top. Mr. Vai.
Busy list today.
Yeah.
This first action item is a continuation of the fiber network expansion, which I've brought to you many approval items over the past year for that. And it's for a section that we're wanting to do this fall. As a reminder, we have a 4-year effort to prepare us for the sunsetting of leased communication circuits from local telephone companies. We use this fiber to communicate with our substations and generators, and so that's really important for the reliability of our system, for us to have good communications in place. At the end of 2019, it'll be around our 3rd year, we'll have approximately 73% of the project completed, barring any unexpected flooding or circumstances that are out of our control, but and it looks like we're still on track for a completion at the end of 2020. This particular contract is for construction and labor services. So what this looks like is kind of the removal of the existing ground wire and hardware, replacing that with the new fiber optic in place, performing any make-ready work. So there'll be poles and pieces of equipment that have to be replaced, a lot of times due to weight or from an engineering standpoint. And then as we have people on site doing that, they'll also look at kind of the surrounding structures and equipment and do any additional work that needs to be done. So if there's some loose brackets, things of that nature, while they're there, they will take care of that. So I'm excited from that standpoint because it allows you to see a lot of your line that you may not normally in a normal progression of a year. And so there's some good things there. From a proposal standpoint, we had 3 proposals come through. All 3 were legally and technically responsive, which is fantastic. Generally speaking, we would have liked to have seen 4 to 6, but there is a ton of work going on right now in the industry, and so we think that is probably reducing the number. The proposal by Watts Electric Company was deemed to be the lowest and best bid. And for reference, Watts is a company we've used several times. They're in Waverly, Nebraska. They perform very, very good work. So, in fact, in 2018, they performed some of this work on the FND project. So they're very familiar with it also. The engineer's estimate was for $2.09 million, which is below the $2.63 million proposal. When we looked through the estimate, well, the way the estimate was constructed, we looked at kind of a blended average of the last 3 contracts. And so when this came in, it came in a little higher. We started looking at it. And so we think the aggressive schedule that we have this fall, trying to work around outages on the system, you can only take so many outages with all the other work you're doing to make sure your grid stays solid. There's a current high demand for T&D work. We've got our own STP project that's taking place. We have NPPD's R line that's taking place, and California is bringing a lot of those resources out west to perform the work that they need. And then the other piece, which is kind of interesting, is this particular segment will be in shorter segments than some of the other pieces, which were longer, so that means more setup and takedown time for the contractors. So between those, we've kind of attributed the difference to those factors. So with that being said, the recommendation based on legal, technical, and economic evaluations is we are recommending that the board authorize the award of the contract to Watts Electric Company for construction services to install the fiber optic ground wire on existing transmission lines for $2.63 million.
And this is
with that-
underground?
No, this is over.
This is overground, okay.
Yeah, the ground in there makes it sound like it's underground, right?
Yeah, that's what I was
It's
wondering.
ground
is it-
wires.
It's
so
ground wires, but it's not underground, it's
It's
over.
performing two services for us, the fiber piece and then grounding the structures.
Okay.
It's above ground.
Yes.
It's above ground ground.
So, very good. Sorry, I didn't catch it. How many more of these are needed for these projects?
So we have, this will be at around 73% complete by the end of this year.
Okay.
So I don't know how many miles are left next year, 50 maybe.
But one or two more times we'll see this for the end?
We'll have to figure out how we engineer the segments, but one or two.
So one more time, next spring, we'll capture everything that's remaining on the OPPD replacement projects. One more package.
Okay, terrific. Thank you.
And when you say complete, is it actually, are we utilizing that fiber right now, or is there gonna be a time that we just convert everything at the same time? Have you converted this already, or when does this convert?
Yeah, so there's just the point of order
We'll
again.
have to-
Good morning, Danny Belt, Interim Director of Engineering here at OPPD on the engineering delivery side. Yeah, so the question really is like, are we using the fiber today? The answer is no. There's a lot of it that's just sitting there dark. There are a few segments where we did this upgrade of fiber on existing segments that we already had lit. There was actually traffic on that fiber. So those segments are being used, but the overall fiber network expansion project involves a grander effort to provide additional communications in other areas of our territory, and the equipment needed for that, the energization of this fiber is coming in the first quarter of next year.
Okay.
So we'll start rolling it out, configuring it, and getting the communication traffic lit up over time.
So it's not complete segments all the way, we're engineering what we can along the
Okay, so you've got a small amount, but right now, the majority of it's not lit, as you call it, okay.
Correct.
So
And then the only other question I had, this is all progressing as to the schedule that you had in mind. There's no acceleration due to the concerns of trying to spend out the capital
So
portion of the budget, is that
If we
correct?
can speed it up, we could.
Okay.
The limiting factor is the engineering portion, so we have to engineer segments at a time. And if you remember, we're on a pretty tight time frame as it is. And so we can only take so many outages on the system at a given time also to perform the work. And so you have all of those limitations that are kind of stacking on each other.
That's a great question. That's a question that I frequently ask, right? Just the other physics.
Sure.
And we're going through the process right now of looking through other things in our business to see if anything could be pulled into 2019. But, many of your items from a T&D standpoint can tend to be longer lead time. Transformers, for instance, you're going to pay a little bit down, and it takes them a while before they have something like that available. It's a continuing conversation between finance and the rest of the organization.
Thank you.
We've used Watts a lot. I mean, I see those other bids are quite a bit higher, but they must be pretty big, because I see these guys everywhere. I mean, are they a nice company out of Waverly, and they're good, and
As far as
been
the
doing a
size,
good
I
job
don't-
for us, I
Danny, can you
take
speak
it?
to their size?
In relative terms, Watts Electric is not real big when it comes to like transmission construction. There's the Brinks and the L.A. Myers of the world that are much bigger
Yeah.
than Watts. You see Watts a lot because they are pretty heavily involved with a lot of road projects. So you see them
Yeah,
working
that's
on
where-
signs and traffic signals and
Right,
things like
right.
that. But they've been a great partner for us at OPPD, particularly on some of our more routine transmission projects. They've been really good. It's easy to mobilize. They're local, so we can interface with them pretty routinely.
Good to
So
work
they've been a
with.
great partner.
Yeah.
And they know our system, they've spent enough time, and that makes a difference when it
helps.
comes
It
to
does.
bidding on contracts.
efficient, probably.
Any other questions?
Looks great.
No, it's
Thank
good.
you.
Thank you, Danny.
All right, we have some pictures for the next item.
I'm excited.
Oh,
Yeah.
good, show and tell.
I'm not suggesting they're good pictures, but they are pictures. So this one's a little unusual. We have 3 high-voltage transmission structures at 2 different river crossings, which have and continue to be impacted by the March flood.
See
The
that
locations are highlighted on the map in front of you.
You can see
Prior to the flooding event, these structures were outside of the river channel and on dry ground. If you want to move to the next slide, it's kind of hard to see. Let me run up there.
Yeah.
Back it up. So it's hard to see, but this is your water before, and this is your structure before. This is a Google Earth out of our geospatial map. So you can see it's not in the water at that location. If you want to move it to the next one. And now it's right in the middle of the channel.
Wow,
And
all those
so-
trees left.
That's a plat, correct?
I wish we had the same angle for both
Yeah.
pictures, but we weren't necessarily expecting a flood to show before and after. So, but it's interesting, in this section, you had river move between 500 and 700 feet,
Wow.
which is pretty significant. And so because of that, you have erosion taking place at the bottom of these structures, and we need to do some things to shore those up. If you don't fix them, they will ultimately fail at some point in time. As one of our utilities here in the state saw with the flood, they had some structures come down. And so luckily, we've got the time. We still need to get this done before the end of the year. So if you think about ice dams that take place in Jan-Feb time period, if you think about the potential flooding for next spring, and when that happens, you have trees and cabins and other things that float down the river, and you don't want those banging into your structures. And so right now, we have some vulnerability. Let's see.
Troy, we have the existing and the proposed so they can
Yep.
see the difference
Yeah.
and what that will look like.
So is this true for both of those locations you had on the map?
So one location has the structure in the middle. The other two structures are not necessarily in the water at this time, but any additional push by the river, any additional expansion will continue to erode. So all of those structures need to be remedied and have a cofferdam put around them.
Oh, Director Williams' day job can probably tell you more about this, but as a cyclist across the Platte, I think that trail's still closed, isn't it? The bridge, yeah. Due to, I'm sorry?
He's working on it, he's trying.
I'm not casting aspersions, I'm just indicating the magnitude of the damage that's possible out there. So, yeah, it's dramatic and certainly needed, I think.
Well,
So, if I understand correctly, one is an immediate threat, and two are indicated to be a potential threat.
At risk.
Risk, yeah. And so is there anything else along our system that also maybe is like the next layer of risk that we should be addressing this year yet?
So after the flood, our engineering groups have done an expansive check. We've had substations and things that we're working through from the flood, and those have yet to be finalized. But from a transmission structure, these are the ones that we have concerns with right now. If the river meanders more in the future, it'll look differently. We can't predict where that river may end up at some point in time, just like I don't think we've ever would have predicted that much of a move. But if we continue to see flooding in the spring, we may have other structures. But for now, these are the ones that we have concerns about.
Yeah, I'll just add maybe a specific, if you don't mind, Troy. I mean, some of the conversations that we've had in Sarpy County, primarily with the City of Bellevue, is potentially some relocation of transmission that may be along the Missouri River path, and that in one example would serve Offutt Air Force Base on the east side, that we may, over a long-term strategy, part of the transmission improvement plan, long-term transmission improvement plan, would be to relocate that to farther west and not to be part of the river path, just because of this.
And potentially reduce a substation in that.
Exactly. So there's
That's
some-
still in the early stages. There's a lot of work that has to be done. So when we go through those type of evaluations, specifically on a move and a change, we have to run many of those scenarios, which I think you have seen from a transmission planning standpoint in some of our education. And so we have to look at that with all the other things that are taking place in our system to make sure that we properly prepare for that.
But just to clarify though, but for the Platte River, you've decided you're not going to reroute, you're going to keep that as is, but you're going to build it up.
I was going to get to a little bit, but for the Platte River, so our other option would be to move structures. which we would not be able to do in time for this
Right.
next season. And any movements would require replacing or moving structures in different locations, which you have to go through that siting process. And so your cost would be well above anything for, considering building a dam.
How permanent is this solution?
It's permanent.
Permanent? Okay.
So I was gonna get there, but just what they do is they drive these steel sheets around the structure itself. They come in, they scoop out any debris or slush that's in there. They put in rocks, and then they use a concrete to fill it up, and so it becomes a permanent structure, which is great, right? I mean, these structures last a long time, and so
Yep.
now you have a permanent fix to keep them viable for many years to come. And so the type of entity that would do this work are similar to bridge builders. And so folks who know how to come in, traverse a river, and add structures safely.
Do you have an estimate for this?
Yes. How about I just walk through this and then we'll
Okay.
see what questions we have.
I didn't know that you had this much. I'm looking here and I don't see that much of an estimate.
So due to the urgency and the complex nature of this river construction, we're providing an engineer certificate stating that the best course of action is direct negotiation with entities. So we want to kind of work out and understand how each one would approach it, how would they get to the structure, how would they build it to make sure we're all in alignment there. And obviously cost is an important piece there. As we walk through this, we have an engineering consultant that helps us, Olson. And they'll work with us as we go through, and we'll hire a contractor, and we'll also have to work with the Corps of Engineers as we go down this path. They'll have to approve any steps forward. Approval by the Corps can take somewhere between 40 and 60 days, so we'll have to move fairly quickly to progress this before the end of the year. The work itself only takes a few weeks for each structure, so it's not like it's a really long effort. We're estimating around $2.7 million for the cost. The anticipated reimbursement from FEMA will be around 75%, so a lot of that will be covered. And again, an alternate or a rebuild of that line would be at least double of what we're thinking this is going to cost. We already have one of these structures up near Sioux City, so it's not the first time OPPD's had to work through this process. And so at that point, I'm seeking the approval for the engineer's certification and authorization for management to negotiate and enter into a contract for materials and construction labor services associated with these three structures at the two locations.
We have companies we're generally familiar with that we're going to directly negotiate.
Hawkins.
Hawkins?
Yeah, I think they're the one that built the last one.
Okay.
I'm not familiar with, there's a couple others I think they mentioned. So they'll reach out to at least three, Midwest Infrastructure, and then there's one called Constructors that they may have a discussion with. There may be others.
What are the consequences potentially of the do-nothing alternative? What, you lose that line and what
The
happens?
structure falls, we have a 345 and a 161, which are major pieces of equipment to import power in and out of the service territory. It would not be a good thing for us to lose those structures.
Thank you.
Hey, Troy, on the FEMA, if they're paying us, maybe you don't know how long does it take to get paid back? Or
A long time.
years?
It'll be a while.
A while. Yeah. I knew it's a process.
It's a scientific term we use.
A long while.
So thank you. No other question? Thank you, Mr. Bonner. Ron?
So we have two items that relate to sale of property. These both are being sold to Douglas County to do road work. So I'll start with the first one, which is 1101 North 180th Street. So this is 2.09 acres that's being sold to Douglas County to expand or deal with roadway in terms of improvements for 180th Street between Dodge, Blondo, and Maple, so there'll be work done there. That's the first one, and that's for $167,000. The second one, and $200. The second one is a smaller piece of land. This is $21,470 for a piece of land that is 1.159 acres. So we're looking for authorization by the Board of Directors to convey the property to Douglas County for this road work.
Kate, especially recently, it seems like the acquisition costs, certainly for property that becomes closer and closer to the metropolitan area, becoming very expensive. Do we have any set plan in place or policy as far as how far out we project we might need to acquire some land, or is that just too difficult to do, say 5 years out?
We do have a process for looking at land further out in time. For various reasons, we have a process for that. I don't know if I'd put a time marker on that for that, but it is to look out in terms of what's going on in the area and what we're needing to do or what we perceive we'll need to do. And we do have a way of looking that out and then bringing it in to look at how to purchase that land or where we should purchase that land. So there's a process.
So it's Troy's team on the transmission side and certainly tied to substation side begin to plan longer-term strategies of what that looks like, including even distribution. That's where it will tie back and say, hey, we're thinking we need to have these substations, these transmission, these distribution. So this is an area where we would like to acquire some land for a substation, and that is quite a ways out in many cases. In some cases, it's project-specific, like we've seen with Facebook and other kinds of activities, but they do kind of go out there a long ways where we may purchase property and 5 or 10 years later develop it for a substation.
I mean, I realize we shouldn't be getting into the real estate speculation business, that's not our function, but what it's these prices, acquisition prices anymore are kind of eye-openers sometimes. Okay.
This is where we're missing Sandy Dodge.
Yeah, no kidding.
You could have helped us on this one.
So these pieces of land are adjacent to existing substations, is that what they are? Or why would we own land out on 108 different?
So sub relates to the service center substation. So yes, to your point, it's adjacent to land that we own because of the properties that we have, like a Elkhorn station, a substation. So it relates to that. Yeah, it's not just land sitting there that we happen to have. It's related to other properties.
There is
yes.
a substation right there at 180th Blonde, right, 181st.
Right.
To that end, or is there full conveyance of the property rights, or is there some right-of-way retaining?
I'm going to ask Jake to answer some of these more specific questions related to that. I want to make sure you get the correct answer to the question.
Jake.
Thank you, Jake.
Thank you. Jake Farrell, Manager of Building Services. Yes, we convey full fee title for road projects, but we retain easement for the entirety of the property. So this easement will allow us to have our facilities in now that we have currently, or any facilities we put in the future, give us the right to do that without having to go acquire that right to do it again. So, yes. And we retain those easements so that our rights are when we bought the property through chain of title. That's really important as subordination rights come into play.
So maybe I missed this. So we're selling 2.09, and then tell me about the temporary easement for 1.05. Help me understand what a temporary easement is.
So a temporary easement is very short in nature. They will need to grade to match the grading of our property to their new grade of the road that's going higher in elevation. And there's certain 3-to-1 slopes and stuff that have to be maintained. That goes in farther. They don't need that property long term, but they'll be working on our property and pay us 10% of value per year.
Okay, thank you.
Any other questions for Jake? Any other questions for Ms. Brown?
Thank you.
Thank you, Jake.
Good?
If you're good,
I'm
And that'll be on the consent agenda also.
It will be on the consent agenda. Okay, Ms. Fisher.
Yes, good morning. I'd like to talk to you about the Nebraska City Unit 1 turbine. As we went through the turbine this spring, it's normal for us to go in and do inspections periodically on our turbines and several pieces of our equipment. As we went through that this spring, what we found was there was evidence of stress corrosion cracking in our low-pressure turbine rotors, LP1 and LP2. Stress corrosion cracking is a known failure mechanism of metal structures. And the way that works is Typically, you have a very small atom that penetrates through the metal structure, the infrastructure, and as the metal heats up, it provides a pathway for it to insert itself. As it cools back down, as you come down off of there, it's not supposed to be in there, and that's what causes the cracking that you see. Next slide, please.
There we go.
So what we identified was in the L-1 steeples. You can see them there, and I'll show you a close-up here in a minute. We also inspected the L0 and the L2 blades, and those rows we saw no stress corrosion cracking in those areas, just in the L-1 steeples, and not in the blades themselves on L-1. If you can go to the next slide. So what that looks like, I thought you might be interested in. You can see those steeples kind of expanded out here in this picture. And up above, you can see that small white line. And what that is the actual cracking. So these are very minute, small cracks. We did this inspection specifically looking for the stability of the turbine and the rotors themselves. We don't necessarily look this hard, but we did this time because we just thought it was time to do that. These rotors have been in place since 2002, and since we were going to be in a longer term outage, seemed like the right thing to do at the time. What it identified was the stress corrosion cracking failure mechanism, and we went to Siemens, who's the original equipment manufacturer, and Siemens did an analysis and recommended that we put the rotors back in service as is, and that we operate them for no more than 16,000 hours, which takes us to about April 1st of 2021. We felt comfortable with Siemens, but we also wanted confirmation of that, so we went out to another firm called TG Advisors, and they did confirm the analysis that was done by Siemens, that the rotors were indeed safe to put back in and to operate for at least 16,000 hours. At the end of that 16,000 hours, the recommendation from Siemens was to repair, replace, or reinspect. If you reinspect and the corrosion and the cracking has gone too far, you can no longer operate the rotors, then at that point, you can no longer operate the unit. So we immediately went out to our insurance company, FM Global, told them what was going on, gave them the recommendations both from Siemens and referred to the one by TG Advisors. FM Global said as long as we stay within the recommendations of Siemens, that they would continue to insure the turbine as is. So with that, we went out and at that time when the turbine was still torn apart, we asked GE and Siemens to come in. We also asked Toshiba to come in and to look at the rotors to see what they could do as far as a repair or replace options. This is critical because if those vendors don't get in and actually take very specific measurements of the rotors, they can't really help us in the time period of the 16,000 hours. And so Toshiba declined to come in and measure. GE did come in and measure. And then Siemens also took some measurements to make sure that they knew exactly what was installed. Having done that, strategy was to go out for a RFP, a request for bids, and in doing so, we put it out to both GE and Siemens. They have both responded, and what we found as we went through the bids was that the GE bid was both technically and legally non-responsive, which just left us with Siemens. Siemens had given us an early indicative bid of about $12 million for the two rotors, to replace the rotors. And at the end of the day, when their bids came in through the RFP process, their bid came in at $9.8 million. And so as we've gone through this, we've looked at several different options that we could do with this unit. We looked at, what could we do? Do we need the unit? How do we maintain the unit going forward? What would happen? Could we go out and get purchase power arrangements? Could we build new generation? All of those options do not meet the time requirements that we need in order to maintain a nice, stable, reliable, resilient system in the interim period between now and whenever we would do something through a decarbonization study with our coal-fired generation. We also went back and looked at, what is the profitability of this unit? This cost of $12 million, which turned out to be $9.8 million. Is that, when is that, how much is that is recoverable? It will be a payback period of less than 1 year to go through and do the repairs to this unit. We also looked at what was the outage that we needed to take, and we've included the cost for that outage as far as the lost opportunity cost. And that took us to the $11.9 million that you see in your documentation. So that did include the cost of the lost opportunity and the outage as well. So we are recommending and requesting that the board authorize us to award a contract to Siemens Energy in the amount of $9.825144 million for the replacement of the NC1 low-pressure turbine rotors.
Mary, what percent of our overall production is that?
I would say, about a fourth? Third or fourth?
Baseload generation.
Baseload is,
You need to come up to.
yeah, it's gonna be 22, 24. It's about a fourth.
Okay. Yeah, it's
About
about
a fourth.
Okay, can you introduce yourself?
Yes, I'm Clint Zavino, manager of system engineering.
Thanks. Come on, Clint, come on up. Your turn on the speaker, yeah.
Okay.
Question?
So what was the answer?
Yeah, Clint Zavino, manager of systems engineering for Nebraska City, actually for the fossil fleet now. So Nebraska City Unit 1's generation is roughly 650 megawatts net. North Omaha unit, you run about 175 megawatts, and then they got another 100 megawatt unit. And then Nebraska City Unit 2, our share of that is about 350 megawatts. So of the dispatchable consistent load, Nebraska City Unit 1 is over half of that. Over our total generation portfolio, it's about a fourth, and you include all the renewables and the peaking stations.
So an extended outage would certainly be a significant challenge.
What we just had?
Yes, it would be a challenge to the resiliency of the system. Yes.
So Mayor, I just have a question. This work won't be done until 2021. The reason we're approving it now, 2 years in advance, is because it takes that long to procure the,
It takes that long to manufacture
To
the
manufacture.
rotors and deliver them to the site. And the outage that it would take, we've estimated to be 28 days to install the rotors.
okay. So it's a long lead
Today,
time.
that unit is providing over a third of our load as of right now.
Today, right now.
Currently.
Yeah. Real time.
But I just was thinking about timeline. I mean,
Yeah, it's
for us to,
19.
for the
yeah.
board to approve work that's not going to be done until 2021, we have to approve it now for the manufacturing process.
We do.
Yes, so the end part of the work, the actual installation, the 28-day outage period won't be until 2021, but after Thursday, immediately we would begin by signing the contract, they would begin the manufacture, and there's a lot of stuff that happens prior to the arrival on site. And so approving it now, I mean, it's not that the work won't happen, I mean, but we are starting a long process that takes 18-plus months to get the equipment to the site with the specs necessary to meet this kind of performance, and so, yeah, I mean, this does feel like a long lead time, but the steps necessary to deliver that type of a piece of equipment.
Yeah, so think about when we purchase a transformer, it's about a 12 or 18-month lead time for when we do the contract to where it actually is then delivered on site. So these are highly technical pieces of equipment that take time to manufacture. I think it's really important for Mary and Clint and Scott and the team, when we had that turbine open, to bring in the second vendor to create that kind of competitive environment in the bidding is pretty important, where it saved us a couple $1 million to be able to do that and actually improve the financial return of that kind of investment in this system that we're going to be doing. So, appreciate their openness to begin to think about that when we had the turbine open during the outage and identifying that. That was pretty timely.
Mary, you mentioned some analysis of other options aside from replacement. Can you give some overview of what those other options might have been, or what the comparative costs or consequences
The
might have
outages, for
been?
example, the length of the outage for that.
We looked at, could we get enough purchased power in to replace it? Historically, we did a purchased power RFP. What we saw in the 20 to 21 timeframe was there was not enough capacity in the marketplace to replace this. And it was really not economical to proceed with those purchased power arrangements. Again, that was historically. We also looked at, could we replace this with any kind of generation that we could bring online? And really, the timeline to build new generation is prohibitive. Probably the earliest we could get it online would be 2023, 2024 timeframe. And so the timeline was prohibitive. If we look at dollars, just bringing on new generation ranged somewhere between $300 and $600 million. And so the $11 million, the $9.8 million investment in the rotor seemed like the best alternative. We also looked at repairing, and while repairing was cheaper, the length of time that they would need to have the rotor out and the NC1 would be down was extensive, like 5 to 6 months. And so that makes for a much longer outage with a lot more lost opportunity. So we didn't think that was a viable option either. So we've looked at a number of different options, and we really believe that this is best alternative.
And then making that best selection there, Javier, can you highlight something like a $9.8 million investment here? What does this look like in the budget this year, next year, the following year? I mean, how does this get addressed as far as the capital investment, or I mean, does this cause any kind of consequences in other areas?
No, it is certainly a big project. I would consider this a big project, but it's something that it wouldn't even hit this budget. We only pay for these when we take ownership of the unit. We'll have to pay for some engineering studies to order and get the unit done, but we would only, if this is going to be in the 2021 timeframe, this project would come, most of it would come in 2021. So it's something that we need to start planning for it, and it's certainly something that we can accommodate. It's a large project, but it's not a gigantic project.
So our capital budget this year
Yeah.
is,
Our capital project this year is about $200 million, just to give you an idea. So these would be about 5% of our capital project, capital portfolio. Large to consider, of course, but it wouldn't consume a big portion of our
Mary, question and comment. This is just for manufacture and delivery, but not installation, is that right?
That's correct.
But would our team do the installation?
Yes.
Okay. And that's, okay.
And that's included in the 11.9 or $8 million.
So that's all, the cost for that, the cost of the outage, that's all rolled into.
and the opportunity cost
Yep.
that we'd be missing that 28-day outage.
Yeah. So quick,
Opportunity gain, set.
That we're not able to sell in the
Sell
market
in
for
the
those
market.
28 days.
We'll have to buy some.
so the rough and dirty of it is, you know, we're reinvesting in a coal unit while we're studying decarbonization.
Right.
That's the tension, and that's fine, but I think the reality is the decarbonization work that we're doing will wrap up after the payback for this, right? So even though we're investing in a unit that, you know, is one that we're, you know, longer term talking about how does this eventually find its way offline, the reality is we need it today. And, you know, it's a pretty prudent investment, especially given the alternatives that you examined, and they're just, it quickly became clear that those are not even feasible in any way, shape, or form. This is fairly straightforward.
So I want to help you with that.
Mm-hmm.
So this is a steam turbine that is agnostic of fuel source.
True.
So I'm
Good
comfortable
point. Good point.
decoupling those things. So it's possible that in the future, this same
could
turbine
use
might
that.
be used
Sure.
with another alternative fuel source. I don't know what that looks like, but I don't think anyone does yet. But
Good
it's
point.
not a lost asset as long as we maintain it. And it doesn't care if it's getting it from natural gas or coal or
Some other
whatever.
steam generation,
Some
or
other
whatever
steam
that may look
generation.
like.
Yeah, that's great.
Good point.
Other questions?
I'll just comment. On some of these, of course, we gotta do these things. I mean, it don't make sense, but I just adding up, it's like 14.1 million. But when we do things, they don't, how this all works together. The refinancing and all those things, thank goodness we're doing some of those, because we're gonna bring in that money to, I don't know, I'm just saying the interrelation of all these things is very important when we're looking at how this system is run. So the question you brought up earlier is, well, you don't know when these things are gonna happen. So every little month, it all adds up to the big picture. But I was just saying, because earlier, hopefully we'll get this savings, well, we will, on the finance end to help defray these costs that kind of didn't just pop up, but a flood, rotor. So anyway, just throw it out there, the big picture. Amanda and I were talking about that earlier. It's like, this is a good example. So.
Well, this is I mean, and I appreciate the challenge of the board on this, but my guess is Mary would say the challenge of the senior management team on this was if great, if not more, to make sure we are putting the right, certainly the business case around this and the affordability case around this from our customers, owners, the environmental sensitivity piece around this and what we're doing. And we felt very comfortable with this recommendation and the due diligence that the team went through. And again, as we were going through the outage and this was identified, the timely work of the team to bring in the two vendors is absolutely critical. And so from that perspective, saved a couple $1 million in that regard. And I think long-term, having them come in to do the inspection gives us a better product coming out because they really understand what the implications is of the pitting that occurred. So, and again, it's limited to, the L1 part of the turbine. The investigation is very strong that the other parts of the turbine is solid and operating well. That's a good sign. That speaks to the men and women at Nebraska City that operate this plant well, and to making sure that we continually operate it as long as we need it. So,
on the heels of that comment, just an opportunity perhaps to look under the hood a little bit more and talk about the excellence of the team down there. You mentioned in the documents that we've got that this is a common problem, and certainly the OEM is familiar with that. It's a problem of the material itself where the cracking occurs and the environment within which it works. So I'm guessing that there's some OEM material on how to treat the steam that comes in, and just wondering what's done there and how to make sure that we're operating in an environment where we have the longest time period before this happens again.
Thank you for that question. Yes, actually, the OEM did recommend an expert in this field. He came out and examined and took a look at not only the turbine itself, but also the structure leading into it, so the steam piping going into it. To quote him, there are no smoking guns. Our chemistry monitoring and control is on par with the best in the industry. And so, we do, are capable, or we can have upsets. When we went back and we looked at the history, we couldn't find anything between 2010 and 2019. 2010 is when we changed some of the control systems, and the historian is lost, and so that data is lost, so we don't know what happened between 2002 and 2010. There was likely some upset in the chemistry that got into the steam, and at that point, once it's exposed to that environment, you don't get rid of the chloride once it's there, and it took a period of time, and we don't know how long, for that to integrate itself into this and to cause this cracking. So there was likely some upset as we operated. We are very careful about maintaining that chemistry. We have taken actions to go out and take weekly grab samples just to make sure that we're not missing anything. So since we've been back in operations, we have done that. We have found no indications of chloride at this point in time. And so we are doing what we can to mitigate the consequences going forward.
Very good. Thank you. So, Mary, you mentioned 2002 was the date of the original installation?
Yes.
And is there an expected life of a new turbine?
The expected life is typically around 30 years. They can last as long as 60 years. The ones that we have in North Omaha, I believe, are still original equipment, as long as we operate and maintain them appropriately. And so these are long-term components that we are replacing them with.
Great. And following on your comment earlier about the decarbonization study that's currently ongoing and the different options that we considered here, I'm also comfortable with this recommendation based on the need to keep the generation online now through 2021 when the replacement will happen, and with the work that we're currently doing to investigate those future options. I do think this is a reasonable investment and something that we need to do now, and I appreciate the staff's time to focus on that, provide the justification behind this investment compared to other options. And I think this is, it's unfortunate to have to make an unexpected investment in some of your existing equipment, but given all of the considerations, I think this is the right decision and something that we need to do now. And it allows us the flexibility to carry out that strategic initiative work to figure out what is the very long-term plan at different facilities and how to meet those generation needs in the future. So I think this allows us that flexibility as we've got that other plan going. So I appreciate the work that you've put into this and the recommendation here. Is this a consent item or is this a discussion item?
It's currently on the consent item.
Currently on the consent. I think it'd be on consent. Yeah, thank you, Mary. Your entire team has done a tremendous amount of work on this. From the very beginning, from doing the risk analysis of this and deciding, by the way, we should look at this, finding it, and then after finding there's a problem, looking at the different alternatives, even into the different alternatives, to the multiple alternatives that you looked at, and the financial stuff. The entire team worked on this, and we appreciate it.
Absolutely. The entire team up at Nebraska City, as well as the engineering team, as well as experts that we brought in from Fort Calhoun and North Omaha. So it was an overall engineering, or energy production and nuclear decommissioning effort. So thank you.
Thanks, Mary.
Very good. No other comments on all of the action items, this one being the last one. And we have one more reporting item, Ms. Fisher.
Thank you. Yes, I'd like to report on the Nuclear Oversight Committee. I'll start with Nuclear Oversight. They continue to do assessments and reviews at the TN facility in South Carolina. And that continues to go well. Currently, we have 5 baskets inserted. There was supposed to be another one today, so hopefully by the end of the day we'll have 6. Also, our internal NOS, or our Nuclear Oversight Committee, they're doing assessments of our emergency preparedness, preparedness program. They did identify that there was one issue, and that was really a categorization of an issue that was entered into our CAP program, so very minor detail, and overall the emergency preparedness programs in good order. They are also looking at a number of different vendor oversight programs, and so they're looking at Luberite. They're also looking at a NUPIC audit down in the Southwest region. This is where we trade auditors back and forth across the nuclear industry, and so we continue to support that. Going forward, they're making preparations to look at fire protection and engineering design and operations, so they'll be doing that over the next month. In terms of the overall project, we continue to make progress on the construction of the independent spent fuel storage installation, new security facility. They has a compacted foundation. I think many of you have seen that here recently. And just to remind you that that has been built up to be 3 feet above, or approximately 3 feet above the floodplain that we saw in 2011, so the highest we've seen the floodwaters. And that is consistent with the ISFAC itself, and so it will be built up to stay out of the floodplain. We have started dry runs on moving our fuel from spent fuel pool to the ISFAC pad itself. And we have received a canister, one of the canisters with the baskets inserted, at the facility in order to conduct those dry runs. So those will be going on for about another couple of weeks. And the NRC may or may not come out to witness that. And so that's something that we can see what they want to see.
Mary, will they tell you that they're coming, or will they just show up?
They are here today. They have just their normal third quarter inspection that they came in yesterday. It just happens to see if we're doing what we're doing at the time that they're here. But they can also require to come out and watch it at any time that they want. Last but certainly not least, many of you did attend the Decommissioning Oversight Committee. Decommissioning Oversight Committee gave us lots of opportunities, but also recognized the great work that's going on up at Fort Calhoun. They looked at safety management operations, as well as other areas, RP, licensing, and nuclear oversight. And they did a full review of everything that's going on up there, and I'm pleased to report that it was pretty positive readout again. And the fact that the team takes the actions, takes the opportunities that they provide to us and actually put those into work, and we do respond to each and every one of those every time they come back to the site. That concludes my report.
Well, thank you. I was out of town the last week of July. Any of the board members who attended that meeting want to talk about?
You want to start?
Yeah, I mean, it's the second time I've been able to attend one. It's a complete treat to be there. The team is really exceptional. I think it was Tim maybe who used the term "I'm pleased but not satisfied," and I think that's a really good summary of what the culture is like there. And that's not inconsistent with the rest of the organization, right? But I think it's a drive to perform, even though we're doing well in the first place. So it was great. I was really happy to be there. It was impressive performance.
Yeah, I went up there this time looking at, okay, what is the relationship between Energy Solutions now and the team? And when I got back, I felt that they are working together. This time, Energy Solutions actually took part in the conversation. Before, they used to be sitting in the back. They took part of the conversation. And I think that they're doing really well. And it's interesting that they always follow up on whatever the previous meeting was, whether or not those recommendations were followed through with, which they were, and they were completed. I'm always happy to see the corrective action program is so small. I used to remember when it was in the thousands. And it's, to me, the team's working really, really well. I appreciate it.
So I was there and I was really impressed with the work that's going on there. It's my first opportunity to be at one of these. My takeaway was that some of the statements that were made was improved performance despite water management issues.
They're called water management issues instead of.
And then the other thing was really under licensing and corrective action that it was pointed out that this is a model for others to emulate and benchmark. And to me, that speaks to the culture not only at Fort Calhoun Nuclear Station, but throughout the whole organization, that we can put ourselves out there as a model for others to emulate, and that really speaks to the culture here in the organization. So thanks to everyone up at Fort Calhoun and to the leadership for setting the bar really high.
I'm reviewing my notes. Let me make 2 more comments if I could. We're doing a lot of great work up there, but what became really evident to me is that there are still some really big decisions to make. What to do with the reactor vessel was something that I had not thought all the way through clearly, but that's a huge decision in how we do that. And then the last thing I would add for my colleagues on the board was I asked them a question and asked, what advice would they give to us as board members when it comes to supporting what's happening up there? And I made kind of an offhand comment that my assumption is that they would tell me to just stay out of the way because they've got it under control, and they said the exact opposite. They said stay engaged, continue to ask questions,
continue to come,
continue to attend those meetings. So that's what I just wanted to pass that along to all of you, because there's a ton of important work up there, and I think we get monthly updates, but that's just a tiny snippet of what's actually happening and what will be happening in the coming years.
So on that note, then when is the next meeting? The report on?
I'll look it up. It's November. They changed it because there was a scheduling problem, but it's in November, and I'll look it up, let you know before the committee meeting's over. I'm sorry?
2 hours, 8 to 10.
Well, the meeting is a report out meeting of how much time?
2 hours.
It's 2 hours.
But it's
and they're
multiple
done.
days.
It's multiple days. They
It's
spend
multiple days,
a
but-
couple of days
but
up
for us
there. They
to
come
come,
in on
it's
Monday night,
8 to
and
10.
they report out on Thursday morning, typically. So they're there Wednesday
You get the
Tuesday,
Reader's
Wednesday.
Digest.
Yeah, and we've got a lot of stuff in the next 6 months coming
And
up.
it's 8 to 10, and they were very
Lot of
prompt and
challenges.
meeting on time.
Yeah, get there early.
So one other item, I'm sorry I didn't prepare you for this. We got a little bit of publicity in the Federal Register. What was that about?
There was a notice in the Federal Register that we had requested a licensing change. That licensing change was centered around moving from the security plan that we have in place today to an SFC-only security plan. So this is us getting out ahead of when we need that. Typically takes the commission about a year to review these. They issued it in the Federal Register. We expect to have approval to change that security plan later this year. And what that does is when we move the fuel to the SFC pad, we have the building built, we have other things that we need to have taken care of, we can implement that plan and move immediately into that plan and reduce our requirements from the plan that we currently have. And so it's just us being prepared to move to an SFC-only situation.
Yes.
Can you remind us, what is the timeline for that move from the pool? And when is that expected to happen?
It's supposed to happen from October till June of next year.
Thanks.
Are there any other questions
Big
for
stuff.
Systems and Nuclear? Thank you very much for your report, all of you in senior management, and with that, we're done.
With that, we're going to take a break and have a brief lunch and come back. Okay, thank you.
A working lunch, if I remember you
It
said
might
that.
be,
I
it might
think
be a
that's what you
working
said.
lunch, yeah.
Working
We'll
lunch.
give
Break
it-
and a working lunch.
We're gonna take, yeah,
No.
this is not an hour
we
long.
don't,
This is give us 10 minutes to come back to this.
10 minutes, 10 minutes.
Not in 15 minutes.
10 minutes, 10 minutes. No, I just want to keep rolling here, yeah.
I just need to stay.
Yeah.
TV. Craig, would you like to give public information?
I would love to. Thank you, Director McGuire. First, I want to run through a handful of things, and it looks like I've been allocated 30 minutes to summarize our PI meeting. So we've got a few things to hit.
30 minutes?
It's a smart decision, I think.
How long did it
but
last? It must have been hours.
It was a firm hour. We were in and out. But there are a few things that I think are important for the rest of the board to know about. So I'm going to get started with a discussion about the elected official town halls. As context, several of us have been either proactively or invited to speak at a variety of different events. I've done a handful since I was elected a few years ago, and one of the first things that I did was came to Ms. Olson and said, I want to make sure that I'm sharing all of the correct information, so what can we do to make sure that I'm properly armed in order to do that? And the team was great about setting me up with everything that I needed. I think the reality, my experience, and I don't know what it's been for others, is that you go in with the slide deck with 10 or 15 slides and you get through 2, and then it's just Q&A for about an hour and a half. But nevertheless, it's always been helpful to have that kind of preparation done. Be that as it may, I think the frequency of these are picking up, and so the conversation that we had was really about what does this relationship need to be? If we're elected officials out engaging our constituents, to what extent do we need and what do we want from the senior management team in order to ensure that we've got what we need without burdening them every time that one comes up? So that's kind of the general context. I'll hit kind of the high points and then feel free to plug in wherever. I think based on the conversation, we decided that rather than doing this kind of on an as-needed basis in a flow, we're going to create kind of a resource center for us as directors that we can tap into that will get updated roughly on a quarterly basis. So we'll have a PowerPoint deck that's out there, links to other resources. And one of the things that came up actually in our governance meeting, but was a checklist for us so that when we get asked to speak at an event or when we're thinking about doing a town hall, here are the X number of things that we want to make sure we have in place. We've spoken to the right people about how OPPD is being positioned in terms of the event, because it's not an OPPD sponsored thing necessarily. So I think all of those things are in the work, and I don't feel free to hop in, Lisa, if there's.
Correct, I appreciate that as well. Yeah, we made the commitment that we will update a PowerPoint on a quarterly basis so that you have official numbers that you can pull from at each time. And like you said, I concur. I mean, you'll probably get 2 slides into your deck, and then all of a sudden it's a Q&A. But that's what you want to do with your constituents, I assume. So with that being said, we're also going to put a checklist together that says for the organizations, you can hand it over to the organizations that said, if you'd like to reach out to corporate comm, we'll get you the official logo if that's the case. And so we can kind of set context and so forth and give you the tools that you need, but yes, also give you the flexibility to talk about what you want to talk about. So we should have that probably within the next couple weeks.
The other thing that Julie was very kind to offer, because when I went down to South Omaha for it was an entire town hall for all the public officials, she provided a lot of the pamphlets that were very, very helpful and very well received by all of the people that attended there. They really did enjoy those.
So that will be part of the checklist as well, so that you as a director can go through and say, I'd like energy efficiency and so forth. Do you want it paper? Do you want it electronically? Type of deal, so.
Because the public, they did take them. In fact, I've got to hand some of them back to you, but it was really good. That should probably be in a place that we could get them in the office or something.
That's part of the
easily.
plan.
Yeah.
So it was a great discussion, so thank you for that.
Yeah, no, it was good. And I think, I mean, at the risk of stating the obvious, I think what's important for us as directors is to make sure that we're drawing a clear line in the sand between what is our own individual opinion as a director versus what the company's stated directive is, so on and so forth. For what it's worth, I always start, every time I do one of these, my first slide is, here's the role of a director. Here's what it is, and here's what it is not. Because I think people generally don't really have a clear sense for that. And, the frequency with which you get a phone call and says, can you fix this for me? So helping people understand what our role is, I think, is a good opportunity for us to continue to educate. Any questions or comments from anybody on that?
Yeah, I would just share one, and Javier talked a little bit about it when he talked about his quarterly financial report that we want to do on the organization, and how we run that kind of through a legal, kind of municipal bond kind of filter. And I think as you're out there in public talking, you ought to run the things you're going to say through that as well. And certainly if it's past decisions the board has made, you can talk about those as you think about, hey, what's going to be your position on this topic or that item. I think you have to be really careful, because that could be construed, certainly in the media, as, hey, the board has made a decision on that, and that may have implications on some of the financial bonding and requirements that we have to live by, about how we communicate things with rating agencies, bondholders, as an organization. So that sensitivity, I think, is just good to have. It is for me when I'm out there, certainly in my role, and that there's fine lines that, you know, I get asked to comment on that I have to be really careful on. So you may run across those same fine lines too, and I just ask you for that sensitivity.
That's a great point.
Good point.
Anything else on that one? Here we go, number 2, public notice of meeting process. A handful of members of the senior management team have been, I really appreciate them proactively taking a look at the tools that we use and the manner in which we notify the public that we are, as a board, are meeting. I'm going to first look to Steve, actually, to just remind us what the law requires in terms of public notice for meetings.
Sure. Thanks, Director Moody. The law simply requires an advance notice of the meeting. In advance of the meeting, doesn't even specify a time how far in advance that has to be. The district has always had a fairly liberal position on that, giving well over a week in most cases notice. Some organizations make it a lot tighter than that. I don't recommend that for fairly obvious reasons. But there's no specific requirement with regard to newspapers and that sort of thing. It's you simply have to provide public notice in a way that will allow the largest number of the members of the public to be aware of the taking place of the meeting.
Perfect. Thank you for the legal perspective. Now I'm going to turn over to Scott to talk about the conversations that unfold.
And thank you for grounding it. I mean, obviously there's a commitment from this board and from management and by law to provide such notice. A team of people got together in the spirit of continuous improvement to try to look at this process, and it was very insightful. There's things that are reported on a regular basis throughout the year. Annually, we post meetings. They're scheduled in all of the customer location areas, which is a key component. Also, annually on Facebook and OPPD.com, we stick notice out there to provide that awareness to folks. Prior to the meeting, there's a news release that goes out. We print something in the outlet's newsletter. We also have reminders on Facebook and OPPD.com. And then the Friday prior to the meeting, there is an email that goes to the directors informing them the official notice of the meeting. There's also a news release that goes out to all media, and the day prior to the meeting, there's social media announcements, OPPD.com, and news. So as Steve was saying, the legal obligation is rather broad and general, and I think given the annual, monthly, weekly, and daily type of notification that's been provided here, we are complying with that in a very meaningful way. Agreed. Through that assessment and understanding what worked and what didn't, there were just a couple of minor changes that were being made. One is in the past we've sent paper letters to the media, and in the future we're actually going to be emailing media. It will allow for more timely news releases to do that Friday prior to the meeting. The second, and I'm sure our board secretary may appreciate this, is we've traditionally provided a paper letter I believe to the board secretary, informing him or her that such notifications have taken place. And what will happen now is that will be replaced by an email to all board members. And third, really beginning next month, is that we intend to use outlet newsletters as a way of ensuring that all of our customers are aware of that. In the past, we were announcing it through the OmahaWorldHerald.com, but we will cease to do that next month.
So just one clarification. For outlets goes to every single customer, both electronically or in print. So, and we've been doing that for several months and years. So just wanted to make sure that that was clarified there as well. So, and then social media, it takes a village behind here of the people that are doing all those notifications. So while it may seem systematically, there's a lot of people that are doing the work behind the scenes. So we wanted to streamline that as well. So
You do it in each county too, in all the papers and everything in those counties too? Are we
no,
going to continue to
just
do that?
the World Herald. However, the email goes out to all of the media.
It goes to all the media?
Yes, all the media.
All the media, that's
On
what
our
I'm saying, not
distribution
necessarily
list.
paper, yeah.
So just some changes, and I think it was kind of taking a look at a lot of legacy stuff and ensuring that we have the discipline moving forward to make sure we're doing the best we can.
Yeah, and again, go ahead. Yep.
Just a quick follow-up to that last exchange. We could see your list of media if we're curious about the media in the county.
Absolutely.
There's a big list, as I remember, yeah. Good to see it, yeah. You're in there, don't worry.
This isn't specifically for public notice to be, but the full agenda has to be published 24 hours ahead of the meeting, correct? I mean, somewhere, it doesn't have to go out to everybody, but
it cannot be.
my understanding is that the full agenda, within 24 hours of the meeting, it can't be changed again.
That's the point. It's not so much that it has to be published 24 hours in advance, it's that it cannot be changed less than 24 hours in advance of the meeting, except for items of an emergency nature, which can be voted on by the board at the meeting.
But it does have to be published 24 hours ahead of the meeting?
Yes.
And then it can't be changed after that?
Right.
After that time?
Correct.
Yep.
And that's published on our website, but nowhere else, correct?
On our website.
The agenda.
The full agenda?
The full final agenda is on our website.
Okay.
in most.
I think you used to post it in some places as well, didn't you?
It's on the website.
But physically, it was posted like
yes.
downstairs as well, I think.
Yes, I believe.
I don't know if you still do that. That was
Yes,
just an
we
extra
do.
requirement.
What Director Molhoff is talking about is a very specific agenda, and I think even associated material meetings and things like that. All of those are posted on OPPD.com, and they are posted 24 hours prior to the meeting.
Okay. Any last comments? Okay, the third thing on our agenda for our PI committee meeting was SD5. We'll cover that in a moment. The fourth was carbon fee and dividend. So we wanted to, as a committee, inquire about what the district was doing as it relates to some of the federal legislation that's been introduced around carbon fee and dividend. So Seth provided an update on all of the legislation that's been introduced, and it went back, I believe, to 2014, if not potentially earlier.
And even to a day before the meeting as well, added that. So.
Yeah, so that even at the time of the meeting, there were, I believe, 3 bills that were pretty similar carbon fee and dividend bills. And since then, another was introduced right before August recess. So we had a good discussion about what we might want to be taking a look at as it relates to carbon fee and dividend. Those 4 bills, they're very different in some very important ways. As an example, the range of tax fees go from $10 in one up to $52 per ton in another. So trying to figure out as a district exactly what the potential implications could be is kind of a puzzle to put together based on all the different legislation that's out there. So the next steps, as we discussed, one is to continue to monitor all those bills. That's something that we do already, and that's going to continue to happen. We want to continue to understand industry impacts, economic development impacts, affordability, and we'll do that with engagement from industry and community groups. Third is the team will further review possible impacts to OPPD from various areas such as financial, operational, reliability, resilience, workforce, and emissions. So we're going to take a look at them and really try to understand what would the impact on the district be. And then finally, we'll continue to have these discussions. I'm going to continue to inquire as the PI chair about what we're hearing, what's going on, but it's been quiet since they're on recess. But as
as they come back, we'll have to take a look and see what's going on next. Did I miss anything?
Actually, that was a great recap. What we did was basically went through all of the bills, and that is on diligent for you, just basically the facts. And now what we'll be doing is the analysis on that as well. So, but there's a wide range.
Yeah.
I read through those.
Yeah, I did
That's a
too.
very good summary of
Yeah, I thought that was excellent, yeah.
And I mean, I think that what I would like to ask is of Javier, perhaps, from an economist perspective, if we look beyond the walls of OPPD, how do each of those bills affect our community at large? And so I think that you're a resident economist, so I would like you,
Calling him
during that
economist, not only
analysis,
financial
when you share that information, if you could weigh in on that.
Thank you for
as
bringing
well.
that point. I think that's a really, really important point. Not only how are these potential bills affecting the utility and our generation and the way we transact in the market, but overall for the economy of Nebraskans, right? Could these result in Nebraska exporting more revenue than the revenue we may be receiving? So I think that's a really, really important point on what is the intended or unintended consequences of each one of these bills. So yeah, we'll definitely look.
Excuse me. Thank you for diving in a little bit deeper on those. I appreciate that. Okay, anything else on carbon fee and dividend?
So you mentioned that the material has been posted to diligent. Is there a way that the collected summary of the bills that are out there could be posted publicly?
Well, they are publicly.
It is already-
public. I mean, not on OPPD's site, but.
OPPD's comment.
Or I guess I just
We don't
meant,
have
I
any
mean,
comment.
there are various locations where things are collected, but if we've already done the work to aggregate that information about the different bills that we consider relevant to our operations, is there a way we could post that as part of the committee report or something?
So when we come back, and it's kind of like we do in the state report, when we come back and do the federal report, it'll be part of the board committee work that we do. So that summary will be there when we're positioned to do that. Maybe I'm missing something, Director Williams.
Yeah.
More to come,
Okay.
so, in that regard. But right now, as you saw in diligent, it's basically the facts of each of the bills.
And that's what he was saying. It's a nice summary of the facts of each bill, I think is what he's telling you. You know,
Right.
we're not really adding our comment yet, we're just asking the facts of the bills and whether or not
Like I
that could
said,
be on.
There's a lot of analysis that needs to go on in terms of.
Yeah, there's no analysis yet,
So,
none.
so I'm curious, it seems like there are two levels of action that are available, and I just wondered, sorry I was out of town, I couldn't attend the committee meeting. You know, one level is, as kind of very high level, OPPD could, rather than react to specifics, we could take a proactive stance and say, we're again fee and dividend, or we're for fee and dividend, you know, just as a process. I mean, that's a statement that either the board could make or senior management could make, and it would leave the details to be decided by those who come up with the details and the lobbying and the sausage making that goes on. Or we can sit and look at each one, and when one seems to get traction, react to what's happening there. I mean, my feeling is we should have a discussion about whether we want to do that higher level one. Is this a tool that we see as, certainly it's being discussed. Economists have written papers on it, clearly, lots of them. It seems like we could do something like that. Is that something we would do in this venue? Is it something we do at a Thursday evening? Is it something we do at the retreat? When might we have that discussion?
I think we ought to have that discussion in the committee first, right?
Yeah, let me just first see what the other board members' reactions are to having that discussion before we decide whether or not, what the right mechanism would be.
So my thought on carbon fee and dividend, how OPPD could weigh in on that is, one way of doing it is you could say, we can see that carbon emissions are problematic and that they're contributing to a climate crisis. And we would support a climate fee and dividend type bill if certain conditions existed in that bill. So you can make it condition specific once Lisa's team has a chance to analyze those. I mean, you can look at the different bills, and her team has the expertise in it to determine which of the provisions in each one of the bills would benefit both the utility and the larger community. And we could say, we are in favor of restrictions on carbon emissions with these if these certain conditions are met. And so I think that's a way that we could do that while allowing Lisa's team to take the time to analyze the different bills, and then OPPD could weigh in. We could weigh in as a board with a resolution, or OPPD management could weigh in with some conditional constructs. So that's kind of my feeling about it, is let Lisa's team do their work, bring it back to the PI committee, and maybe determine after that what effects it would have, and that would have the least amount of.
That's good. Other thoughts?
I thought, but I'd like to know what we're doing, because I haven't been on this area that much. Kind of get a glance at what federal legislation is. We all keep up on industry news or whatever, which, by the way, I like your idea of getting to. But I think you're getting down a slippery slope as far as it's so complicated. Not a lot gets done in Washington, D.C., okay? You have different points of view. I mean, I think actions speak louder than words sometimes. What are we here to do for our ratepayers in our area, in our state? I mean, I think Craig and I are just off the cuff, and even Amanda, we talk about, well, what do we do with the legislature? Well, there's work to do there too that would probably have more impact. I just worried that we're asking Seth and Lisa and everybody to kind of do this broad amount of work that really, what's it gonna get us? I mean, to make a statement, you can make a statement to your constituents or whatever you want to do. I just feel it'd be a lot of work for not a lot of results at the end of the day. Just my opinion.
It wouldn't be much influence on national.
Well, we're members of APPA. I assume they're, I don't know.
The feedback I've gotten from APP and LPPC is that nothing's going to be done with these for till probably after the election. So as much emphasis and belief that people have that these actions are going to create is that that's what I'm being told by the experts that sit on the Hill and do that. And so this will be part of the election process, and you won't see a lot of action to it. I'll just give you my take, and I know Mr. Welsh is in the audience here, so he and I had this conversation when he asked me about this early on when I did a presentation with the Sierra Club. And part of the conversation is many of these proposals early on did not really take into consideration the extension of current benefits of renewable generation, and/or it didn't take into consideration. It only had the tax piece of it, right? And then the hope that the federal government would give back the money to the people who need it. And I'll be honest with you, I don't have a lot of trust in that process. We did that with the nuclear mill that we collected for many, many years from our customer owners. That was supposed to create a long-term waste repository for nuclear waste that still hasn't been in place today, and the money's been spent through general funds. And I just have a perspective of, I think we ought to control our own destiny around that, like we have identified today, like we have identified in our strategic initiatives, and to have the federal government tax things to create markets to make action, to me, I don't think has ever been effective in my mind in how they try to implicate markets to do certain things. And I'm not sure that's the right solution. I think our solution is what are we going to do as an entity, and how is our decarbonization strategy going to impact that, or whatever that looks like, without negatively impacting customers in a number of different ways, from an affordability perspective, because any of these carbon taxes will have negative impacts on customers right away. You may not see the benefit and the value of reduced carbon for periods of years after, just like we talked about. It's going to take multiple years to kind of get there. So I have a fundamental belief. One is engage in things that we can control. What I'm hearing from the industry experts is that these are not going to carry a lot of weight and are not going to create a lot of action. Others have told me that's not true. It's going to happen. I look at the people that sit on the Hill that do this for a living, and that's what they're telling us from an industry perspective. So that's my kind of premise going into there. I don't like to give money to the federal government and hope that we get it back to benefit people. Someone's going to have to prove to me that we have done that effectively, historically, in order for me to agree to something like that. So I have a concern, and I think we have a plan, and we're developing a strategy in what that carbon reduction looks like without having to negatively impact markets, without having to negative impact existing costs to customer owners, and I think we're controlling our own destiny. So that's my kind of philosophical take on all of those and what they look like today. And I understand why people are putting those bills in place, right? Because that conversation is going to happen nationally, but I'd prefer the conversation is, let's not have coal generation after X date, and then let's create that marketplace that would drive those decisions over some period of time, rather than using a tax and a punitive, even in a transitional period of time. And what I told Mr. Welsh is that, yeah, do that 15 years from now, do the tax 15 years from now, provide the incentives to move to renewable resources in the manner in which we have them today, that allows that kind of transition without having that significant cost to the customers that would be receiving that energy. Maybe that's your point, is that maybe we create that high level perspective of what that looks like. But as I have read and been briefed on these proposals through APPA, LPPC, and our team, is that they're not creating immediate value and to our customer owners. And I think we just have to be sensitive of that. And as I talk to our large industrial customers and do our CEO executive roundtables, our economy is being stressed enough with costs and trade and a variety of other issues that this would just provide another layer of burden that we just have to be sensitive of as we live here in the Heart Belt. So that's my pontification on these topics. And
it was quite a bit of soapboxing.
It was. There was a little bit of that, but it's heartfelt soapboxing too. So
I don't necessarily call it.
And the question was, is there among the members of the board an interest in talking about this?
Well, I think we're talking about it right now.
So,
I think she's gonna...
well, yeah. So, I'm sorry, did I cut you off, Denise? Two things. At the state level, we've certainly seen where politicians have stolen from an initial setup of the Nebraska Environmental Trust Fund the original plan for that money. I mean, that was lottery money that went to the Environmental Trust that has been nibbled away year after year, and each time with a promise of...
Another example.
I'm reinforcing Tim's point. That happens at the state level too. I'll also say I used to live in the state of Alaska, and they are still arguing over the right size of the dividend that comes back to the citizens of that state from money that is taxed and administered by the government to the citizens of the state of Nebraska or Alaska. So I've seen success and I've seen gradual decline. I think there's plenty of room for different views, and I would certainly encourage the board members to talk about this further at the high level and kind of say, is this an issue where the board would like to put a stake in the sand?
Go ahead.
I was about to sew it up, but if you've got another comment, go ahead.
Well, my only thing is that the one advantage to these bills and to the other bills is that it does bring up the discussion.
Sure.
And we are discussing. We right now are doing some proactive things with the decarbonization right now. We are doing what we can control right now. When you think of the politics in Washington DC, I don't think we have much control over that right now. After the election, I think maybe we can do it, but I don't think now is the time for us to mandate one specific bill or another at this moment. I think it's gonna be changing too much. I agree exactly with what you say, that we should take it back, let them look at it with, if they think anything's got any legs on it, let's look at it. And let's look at the financial impact, let's look at the community impact, everything together, look at the holistic view of it.
So just one other comment is, I think what we could do is look at these bills and see which parts of these bills support our efforts towards decarbonization in the future.
Mhm.
And so,
Good idea.
To the extent that these bills would help us in our efforts to decarbonize, and our efforts to make investments in future infrastructure and production even, how could any of these bills help us in that endeavor? So that was kind of my point.
But can I clarify what we're talking about here, because we're bouncing all, but we're not talking about taking the next steps and going to lobby or congressional delegations at all.
No.
So then,
No.
then I agree with that. You're just asking more, Seth's more than qualified. But the point I'm making, yeah, we never make these decisions in a vacuum anyway. I mean, I think everyone on the board kind of follows these issues, otherwise we wouldn't be here. So if we can sum it up, I guess, and you're just allowing us, but if it comes to like, oh, let's take a vote and go march to Congress, I would not be in favor of that, okay?
Yep.
But if it's something, yeah, it's just more information, we're gonna share amongst ourselves, I'm kind of for that, because I thought this conversation was going towards, we're going to try to make a difference with policymakers. Long term, I agree, who's gonna be the next president? There are so many variables here that we can't control, even if we were trying to.
I think that work, what it does is it provides kind of a framework for Seth and his team as they're talking to our representatives in Washington DC and how they frame OPPD's skin in the game. And I think that OPPD as an entity is respected even at the federal level and certainly at the state level. And so what we say matters and how we frame issues matters to our legislators at both levels. So I think looking at these bills would help us to frame our conversations with our elected officials in the future.
We're just taking a harder look at the federal
Yes.
legislation is what
Right.
you're really
Yes.
saying.
Well, I would say
It's not a
that
problem.
having, I'm sorry.
I'm just saying, I don't have a problem with that. It's taking the next steps is, like I say, that's why we have national, APPA and all these people do it, so I'm done.
Rick?
Well, I would just, on the heels of what Director Molhoff said, is I think it's useful to have the public discussion. We do have influence in Washington, even if it's just on our local representatives. They listen to what we say. Their people listen to what we say. And if the only person speaking, not that you're a bad speaker, not that, is Tim, then that's who they listen to.
Well,
we're-
excuse me, he is our CEO, that we asked for him to speak for us, based on what our strategic directives are, our strategic
Our
initiatives are.
BL, right? Is that what it is? It's not-
Our BL.
Yeah, BL 9.
Yes. In our messaging.
And he is our messenger, and we appreciate that message.
And sometimes there are nuances that I think a full discussion by the representatives of the board would be useful to help inform others. And I think this is one of those times.
Yeah, so let's do that. Do you have something quick?
Just briefly, I think looking at the overall direction of carbon emissions, we are not seeing change fast enough society-wide. Even if OPPD is ahead of the game, which we are, 33% going to 40, goal of 50%, and carbon intensity reduction, as SD7 currently says. Mechanisms long-term to see that kind of societal or national level change. Regulation, which was attempted by the last administration and did not prove successful, or economic, and there are examples of successful economic mechanisms in this area, RGGI or the European carbon emission markets. So there are things that are being tried, and regulatory or price are the kind of the areas where we can work. I'm not particularly personally 1,000% certain that HR 763 is the perfect answer and the only way to get there, but having a discussion about recognizing that a price in carbon is likely in the future and being involved in how that gets implemented and understanding what that means to us, I think is extremely important. And so if we want to have a discussion about, rather than legislative bill-specific positions, saying something about, we believe that a price on carbon is an effective way to achieve the goals of our decarbonization study, I think that would be an appropriate type of thing for us to discuss. Legislatively specific outcomes, I think, are less effective and probably not the core responsibility of this organization. But having a discussion about what the implications would be to our operations and understanding that we want to be proactive and moving toward the direction that our strategic directives are pointing, I think that is important. And so if we have a broader discussion about how to get there, I think that would be relevant, and I'd be interested to see where that goes. Specific to any of the bills that we've seen, unless one of them comes up and it looks like there's a vote in the House and the Senate and moving towards being proposed for signing, I don't think that we need to get to a specific bill, but something like, we understand a price on carbon is important toward achieving objectives. That's a discussion I would like to have.
So let's start that conversation in the PI committee. I think, and maybe this conversation, I think, I'm looking to you to validate perhaps, but this has sort of helped us make sure we're tightening the screws on what we need to do kind of leading into a PI discussion and how to frame that. So if we need to talk online about how to do that, scope that up, and then we'll start the conversation there, and then hopefully bring something a little bit more tidy for us to discuss if it does need to come to the board, but we'll let the PI committee weigh in on that. Sound good?
Sounds good.
Okay. I knew we needed 30 minutes. Finally, backtracking several months, the PI committee had a very brief conversation where the PI committee members brought any concerns to the table that they were hearing about rates. We had a pretty robust discussion here about 3 of those. And so the PI committee asked senior management for a very brief, quick update on all 3 of those. And so I'm just going to quickly summarize what the PI committee heard a few weeks ago. And Javier, please chime in on each of these if you would. On 464, there's a ton of study going on now. Timing, we're looking at something early 2020. That's all I've got. Javier, any additional color you want to add to that one?
Yes. So this is we're studying the pros, the cons, what are the limitations of the current rate design we have, and a lot of those limitations are true just rate design. A lot of them are limitations that have to do with hardware, with meters, and so we want to make sure that we study the whole thing and we present a package to the board that's comprehensive, that looks at metering technology as well as rate design to improve upon the rate that we have today and the service that we're providing to those customers. So it's not a quick fix that language in the tariff could solve the whole thing. I think we want to make sure that we look at that and the metering technology as a package. And sometime in the early 2020 should give us enough time to evaluate both sides.
And just for clarification, 464 is the standby rate.
Yes, thank you.
Distributed generation.
So that, with regards to that timeline, I think that's important. Something like Q1, is that about right, what we're expecting? Because assuming someone wanted to take action on a new rate structure, installation timeline would be generally over the summer, and so being prepared to have
we'll
that.
try to make it as fast as we can. As I mentioned to Director Moody and others during the committee meeting, there's a lot of work around rates, around rate analysis. We only have so many people, so we're beefing up that team. Try to keep up with all the work, but it's a lot of work. So if I can make it happen Q1, we'll make it happen Q1, but it's a large enough decision that we don't want to just sacrifice quality for timeliness. We'll try to make it as quick as possible, knowing that construction season is there, and we would like to provide guidance before construction season starts.
Very good. Thank you. Yep.
So is that work, the scope of that work, is that, yes, it's about the technologies and it's about cleaning up some existing language, as we know, external consultants have talked about, the language that we currently have as being somewhat out of date. Or is it also about the construct of rates? Is it going to be strictly cost of service, or might we also be looking at recommending some new approaches like performance-based rate making?
It is both. It's going to be the construct of the rate and as well as meter technology. Part of this is we're considering all different options. Some of it could be buy all, sell all. Do you have separate meters for production versus separate meters for consumption? How do you work those two together, and how do you make it into a rate that appropriately incentivizes the different standby generation when it's needed and when the customer decides to use it? So it includes not only the tariff language and rate making principles, but also technology available and how easy and how fast can we deploy it.
Thank you.
Okay, I'm going to move on to the next, the Green Power Rider. The team has assessed participation in trends, benchmarking other utilities. They're going to take a look and look at additional information that was provided by the Sierra Club. Doing market research to chart the path forward. We're looking at first quarter 2020 on that. Julie, anything you want to add there?
Yeah, so we will likely be going to the customers with some options and testing those options and come back with a recommendation in the first quarter of 2020. Now, I say recommendation, there's only a recommendation really if it is about actually having to change the rate relative to green power. If it's about changing the program administration, that type of thing that's not specified in the rate language, then we would just provide the board an update on that. But
Sure.
the timing would be first quarter of 2020 as well.
Okay.
Could you verify that we could keep the same rate, but we could change the type of program?
We were exploring a couple options. So yeah, I mean, the rate could stay the same as it is.
Okay.
We may have clarifying language for the rate. We could change the structure of the rate. Those are all different options. Or we could just change things about the program and how it's administered.
And you're looking into that also?
Correct.
Okay.
And right now, the way it's administered is that money goes into the general budget.
Well, it goes into the general budget, but it's offsetting purchase power agreements on the early wind generation.
Very small offset.
Right.
A very large portfolio
very
we have
small
now.
offset.
It's very small. I still have the baseball cap from that, the flat
Oh,
water.
well, I don't have the cap, but I do put money in that fund.
I put money in it. I used to.
Okay, and then finally, rate 110, that's our residential rate, kind of two parts to that. And most of this is just kind of reiterating something that we had already discussed and planned for going forward. So there are ongoing discussions about how to map this out moving forward from a timing perspective. The current plan is for us to go through our current rate freeze commitment while doing a lot of studies so that we have a good plan for what we want to do with rates when we come out of it. That's part one. Part two, and I'll give you a chance to add color here in a minute, Javier, is the block rate. We're also looking at the block rate to see if it's eliminated, how many customers would be impacted and by how much. Sounds like planning to run a power panel on it. And I have timing potential for something at the end of the year. Anything you want to add on either of those, Javier?
That is accurate.
Okay.
Well, we are looking at the block rate analysis, and that is one that we may not necessarily need to wait until the rate freeze period ends, and we're certainly looking into it.
Okay.
And that, we've talked about that in the past, about the definition in the strategic directive about rates, that making an adjustment there would not violate that. And so, yeah, I'm glad to hear that we're looking at that block structure, because the change in the increased fixed portion of the bill relative to the declining block, I think this would be a good improvement. I think it would help to take out some of the impacts to people who are low energy consumers. So I think this is a good step forward, and I'm glad to hear that we're working on it.
We have to be very, very careful, because it will have effects that are opposite, right? And so what we're looking here is at evaluating what the consequences could be and making sure that we have a good communication plan and evaluate whether it really, in general terms, it doesn't violate the no general rate increase.
Yeah.
How do we roll it forward? But initial data tells us that it is something that we could potentially see through by the end of this year.
Great. Any last questions? Okay, so that was our PI committee.
A lot of work done in that committee.
Yeah, so now
Strong work.
actually the thing that took the most time in our discussion for PI is we're on to SD5, our customer satisfaction monitoring report. I'm gonna give Ms. Comstock an opportunity to walk us through it.
All right. All right, well, thank you, Director Moody, and hopefully, I did 30 minutes in the PI pre-committee meeting, so we'll see if I can beat your 45 minutes. So, the Strategic Directive 5 is about our customer satisfaction, and so I appreciate this opportunity to give the board an update. And when I consider, like, what's the theme of today, Craig mentioned earlier about the decommissioning Oversight Committee pleased but not satisfied theme. And so I would say we're pleased from where we sat in January. We've had a dip in some of our customer satisfaction scores, but we always have areas of improvement when it comes to our customer satisfaction, and that's largely based on changing customer expectations. So I think today those slides we've put together will help provide a little bit of insight into what we're seeing and some trends that we're paying attention to and where we'll be moving in the future. So the SD5 itself really it establishes that customer satisfaction is key to OPPD's vision and that we need to obtain feedback from our customers in order to better evaluate and prioritize what our resources and our investments are into all aspects of our operations. I think it's important, and you'll see this in the JD Power customer satisfaction. The performance factors are really all aspects of the utility. This report is not just about the customer service area. It's how we're performing from a reliability perspective, a pricing perspective, what we're doing in the community, environmental, that type of thing. So we'll get into that in more detail. So the primary accountability in this strategic directive is a goal to achieve top quartile performance and customer satisfaction for similar sized utilities in our region for both the residential and the commercial industrial classes. In addition to that primary accountability, we also are called to interact with our customers in a respectful and dignified manner, and this is reinforced certainly by our core values. We want to provide ways for our customers to indicate if they believe they've not been treated fairly, and I'm going to say more important than that, we want to proactively make sure that we are being fair with our customers, so I'll talk a little bit about that. And then we want to be able to provide periodic customer trend updates to the board. So I'll start off with some of the means in which we do acquire customer feedback today. As you heard last month with our customer engagement strategic initiative, there's many ways that we do get feedback from our customers, and we're going to be going through an effort to inventory and have a better perspective of all those different ways. But these are some of the key ones that we use in terms of evaluating our customer satisfaction and how we roll changes to our processes and investments in customer service infrastructure out to our customers. So we start with our syndicated customer satisfaction studies, and those studies are basically national studies that are done. It allows us to do benchmarking against other utilities, such as JD Power, and then you're going to learn about the one we're using for our business, the Escalent, formerly MSI study that we use. And so that's the primary one that we're evaluating when we report out on that top quartile score. We use our OPPD online power panel
an online chat when we're trying to get some immediate feedback. This tool is where we have about 5,000 or so customers that are already engaging with OPPD and saying that they're available to do surveys. And so when we have a topic that we want to get feedback from our customers on a quick turnaround basis, we use this tool. It provides a demographically valid sampling of our customers, and so we're using it to get feedback on products and services, processes, and really anything that's going on to get customer sentiment. The transactional and the journey surveys are those after call or after interaction type surveys that we're going out and asking customers where we know they've had a specific interaction with OPPD to get their feedback on what that journey or experience with OPPD felt like. And we use that then to improve our processes and our interactions. And then the focus groups and empathy interviews are really our means of getting a little bit in the mind of the customer when we're looking at how do we design our programs and our processes or new rates. For instance, we will pull together focus groups or small groups of customers and have them give us feedback on what we're proposing or options on what we're proposing to make sure we're taking into consideration the way the customer views what we're offering. So to measure our success, again, it focuses on our top quartile performance. And so I want to speak a little bit kind of our historical context here. As a couple, late 2017, the board modified this strategic directive to change this to be a top quartile score and to look at it from both a residential and a business. Prior to that, it was a score of 700, which when we initially established those policies, 700 was a high score on a scale of 1,000 in that J.D. Power study for customers, our customer satisfaction. But what we were finding was where the scores were rising, and so we wanted to make sure that OPPD was continuing to, move with that bar. So the residential survey, like I mentioned, we do use the J.D. Power and Associates. When we made that change to the SD, we stepped back and took a look at the options that were available to help us measure our customer satisfaction for business customers. And through that evaluation process, we ended up switching to Escalent, which, like I said, it was formerly MSI when we initially, so if you hear me say MSI, know that I'm referring to the Escalent product. So I'm going to be stepping through both the residential and the business in separate contexts, and I think what you'll notice is I have several slides on the residential with some trending information, whereas on the business I have one slide. And so that's really because we're going through this transitional period and we haven't gotten to the level of statistical sampling that we're looking for in order to draw some conclusions. We believe by next year we'll have enough data that we can better provide some trending information in more detail.
So the business includes all levels of commercial and industrial, so
okay, so the screening is any commercial customer who has a monthly bill that's over $200. Okay, so residential, stepping into residential, I want to give a little context about how J.D. Power goes about establishing what is your overall customer satisfaction index score. And so that is guided, they go through a process, they interview over 100,000 households throughout the nation to understand what's important to customers when they consider their utilities. And so out of that come these attributes that then they group into these performance factors. So for instance, power quality and reliability is a performance factor, and based on what the customers indicated as an relative importance to these other factors and attributes, it weights to 28% of that overall customer satisfaction index score. And so some of the things that would be under power quality and reliability, it's not just about our ability to be able to provide power during extreme temperatures, but it's also what are we communicating and how often are we communicating while power is being restored. So it kind of looks at it from a holistic viewpoint under each of those. So the factors are power quality and reliability, price, and billing and payment. You can see those are tied at 19% of that overall score. Corporate satisfaction or corporate citizenship is 16%. Communications is 14%, and you'll note that customer service is a slim 5%, but that's because oftentimes the folks that are being surveyed under this haven't had a recent timely interaction with OPPD in order to assess some of the questions that get asked. If they have had that interaction, then I believe that score pops up into the teens as a relative weighting percentage. So when we get our results back, we get the data, the trending data for the different factors. And so that's what I'm going to show you first, because I think it's important to see. OPPD has consistently performed high, and our scores have consistently moved up. They're not moving up as rapidly as what some of the others in our Midwest mid-size grouping are. And so that's the trend you're going to see here. So focusing on our performance factors, again, this is broken out by the different colors represent a different factor. At the top of the slide, it shows you the percentage of weight that goes into that. And I think just at a quick glance, you can see that our trend at the performance factor is we've been steadily rising. And then in 19, we took a little bit of a dip, although we didn't really fall below anything in 2017, what our 2017 rating was. But that dip, and you'll see this on a couple subsequent slides, is really related to a year ago. So the last half of last year, those two waves of J.D. Power had an impact on our overall scores. And so it's popped back up, and we'll show you that in a moment. But I think you can see overall, our power quality has always been very strong. Billing and payment have always been strong scores, and customer service has. And then the others are I'll say, rated a little bit lower, but still good standing for the utility market. And again, this is on a scale of 1,000. And so to put a little bit of perspective outside of maybe the utility market would be that a financial institution, that type of entity, may be scoring in the high 800s, 900 level. So utilities have always been in this kind of 600, 700 range. Now they're popping up into that 800 level. So when we move to the next slide, this is showing you how we compared. OPPD is the orange, and it's showing you how we compared against our Midwest mid-size average. And then each bar is for the different years that we've reflected here. At the bottom, you'll see the table that shows the quartile ranking at the top, and then the number of Midwest mid-size utilities that are in each of those years. And so I think at a quick glance, again, you can see that our score has trended up, but that gap between where OPPD was scoring high and where the average sits now in 2019, we sat right at the average for our Midwest mid-size segment based on those results.
Do you have the opportunity, do we just see our own scores as for each portion as in the last slide? Or do we also have the opportunity to compare how we're doing in price, say, against other utilities?
We can compare through the benchmarking tool all of that data.
Okay,
so
you.
We have additional analysis going on. Al Wunderlich is sitting in the back of the room, and his team is the one who pours through this data. And so they're working on additional analysis to help us better understand, not just against our Midwest mid-size utilities, but other utilities that are maybe more similar to OPPD, even if it's outside of our region. How are we performing?
Thank you.
So as you can see, our score, as I said, at 726, it put us at the very top of the third quartile. So this is where, not pleased about this. And we're closely monitoring how we're doing in the quarters coming up, and we're working towards implementing some things that we know are challenges, and I'll hit on a couple of those. So this slide is really to just show you again, this is the highest. The green line reflects the highest score in that Midwest mid-size. So you can see it's continuing to rise. It's kind of plateaued a little bit over the last 3 years, but it's certainly much higher than it was back in 2013, and we had a high score of 673. That high score now is 763 within our class. Another thing to point out is in 2014, 2015, J.D. Power did extend the size of the utilities that could participate. And so some of the utilities that are rising above us are smaller co-op entities that are typically have a higher customer satisfaction score overall. And so that's what's driving some of the higher average scores and the higher overall score.
On the previous slide, we were like number one for like 4 of the years. So we were like top of the quartile, right?
Correct.
And then this year we were third. Which utilities were above us? Can you tell me?
Yes.
Were these the smaller utilities that you mentioned?
That's what I'm wondering.
A couple. So Kentucky Utilities is at the very top with 763.
Oh, they're Midwest?
Wisconsin Public Service, Madison Gas and Electric, Lincoln Electric System. Is that the right? I think.
No, that's right.
Yeah, LES, Louisville Gas and Electric, Daytona Power and Light, and Minnesota Power were the ones that landed above us. And of those, I have a note here. Madison Gas and Electric and LES are less than 200,000 customers.
A lot of them don't have the generation that we do either. I mean, we're not really comparing apples to apples anymore.
So that's some of the other data that I'm going to say. When we talked about the customer engagement, we talked about the data needs and really being able to overlay customer satisfaction data with all this other data that's out there available to us. Maybe not readily available right now, but how can we build that data and use it to trend going forward? So another data point that we wanted to share, this red bar, OPPD, Lisa's team, Public Affairs, does a kind of a brand type survey to get a pulse. And so through that survey, on a monthly basis, they're surveying 100 customers over the course of the year to get feedback on the brand trust, corporate citizenship, and just an overall customer satisfaction score. And so through that data, this is on a scale of 1 to 10. So when you ask a customer overall how satisfied are you with OPPD, we're getting a score that is between, over the years it's been between 8.15 and 8.30. And you can see that's been a fairly consistent score. We see it dip in the waves when different things happen, but it always pops right back up. And I think what we've noticed when we did our customer experience work over the last couple years, and I think it's true with this J.D. Power score, when you start asking customers those specific questions about attributes, like the timing of your bill or payment options, you start asking questions like that, they're going to think about it a little longer and harder and probably reflect differently and give it a score that's different. At that point, they're starting to compare us to the Amazons of the world, their financial institutions, other interactions that they have online or through customer service mechanisms.
One other item is that J.D. Power went completely to online surveying, whereas our monthly Apex is by phone.
So we're sharing this just because we're trying to understand, obviously, what this dip is about. And obviously, if there's a trend, we want to pick up on it and make sure that we're addressing it. And so some of the things that came to light, on the communications piece, and you saw the chronicling campaign that Lisa and her team did. We had cut back quite a bit on our marketing budget. And so we're working now to do some targeted marketing. That was a broader communications campaign, really helping the community to understand OPPD's role in the community and the services that we provide and all of the work that goes on across the district in order to be able to provide power for people's lives. So that indicator, I guess the results of that, we feel were reflected then in our WAVE data. So this next slide shows you what the WAVE scores were over the last 4 years, or 2 years. J.D. Power, when they survey, they're surveying over a quarterly period. So they do 4 quarters in the year. They'll survey for over a six-week period, then they analyze their results. And so that historically that has started, their years are from July to June. And so you can see here the wave 1 for 2018 was July to August of 2017. And so OPPD started, we were at our Midwest size average for that wave, and then you can see we went up. But in that wave 1 of 2019, which would have been July and August of last year, we started going down, and then we really dipped in the second wave. And but the third and fourth popped back up, and you can see again we're back up at 750, and in fact that was pretty close to what the highest was in our Midwest mid-size segment at the end of in that last wave for 2019.
Is there any particular incident that caused that wave 2 that you guys can like pin to? Like, was there a significant outage, or was there?
So there were a few things that could have played into it. We saw that a weird snowstorm, I'll say, in early October.
Oh, yeah.
We still had leaves on the trees, so there was some outage, and I think folks maybe didn't understand why there was outage with that snowstorm. So, and again, I'm going to say it goes back to customers' expectations, right? People's expectations about what we're communicating during those outages is way different than it was 5 years ago, 10 years ago. And so we're trying to do better with that.
And perceptions.
And perceptions. So, and then the other thing that of course went on, I think probably for the first time in OPPD's history, we had 4 board seats that were open.
It's our fault.
And so there was a lot of community.
There's a lot of negative
Thanks for asking,
advertisement
Amanda.
going out during that time,
That's true.
guys.
Okay.
Right,
I'll-
so
I'll
there's
own some
lots
of that.
of conversations about OPPD going on in the community, and maybe not all positive, so perhaps
not all
that had an
accurate.
impact on it. But overall, you know, we want to look and see if it's going to trend back up. So
Until the
there was
next
nothing
election cycle.
conclusive in any of the analysis that we've done yet.
Sure. I
is what we're
appreciate
seeing.
that view, because I
And-
wasn't connecting the dots on that.
And if you go back to those,
But it's true.
Well,
But
to
it's-
test that thesis, I mean,
Yeah.
yes, 4 seats, but have you seen election year variability?
Yes, the last time, 16, same thing.
Really?
Yeah.
I don't know if it, so it's 4 out of 8 board seats. I haven't lived in Omaha long enough, but I would say we saw a lot of negative media and postcards and social media. So it's not unique to OPPD. I think this happens on elections all over the place with Facebook and all that. I think that the type of negativity and attacking and advertising, I think it's increasing. And so I wouldn't be surprised if we start now seeing these type of dips every time there's election, not only for OPPD, but for
Sure.
many others. So that might be the course.
Well, and also this last election, the races were contested quite often.
Well, yeah.
So therefore, it doesn't have.
Well, since we did,
tension.
it has been very contested since
Lately.
we divided into the subdivisions.
Sure.
Yeah. It's just politics.
okay, so then again overlaying the pulse data from Lisa's team, you can see there was a bit of a dip in that data, in that score, in the from wave 2, which would have been October, November to January, February, of 19. There was a dip there, but again, it popped back up. So we believe it's going to continue. It's been fairly consistent so far this year. That doesn't mean we don't have work to do. So what does all of this tell us? When we ask J.D. Power about our performance relative to others' performance, they shared that, you know, and we've seen this in our results, OPPD has always done a great job at those basics that a utility provides. It's about the rates, the reliability, and the relationships. And we've always been a very steady, high performer in those three categories. But to advance, we really need to focus on our digital and low effort customer service interactions. Proactive notifications are essential. So when you look at the high performers, they're in that space. They're able to do some of those things. And as you know from our conversations, our strategic initiatives, that is something that Kate's team and public affairs and energy delivery and the customer experience team have been working on, like what are some quick wins that we can do and implement. So you'll see some more notifications going out to our customers later this year for both billing and payment and outage. And then what is our longer term solution? How do we really build that digital utility to provide our customers that constant flow of information about their service that they're looking for? The other point I think is just being able to more readily analyze not just the customer satisfaction data, but all these other data points that maybe don't have to do with satisfaction necessarily, but like what's the business model of the utility, what's the size, the demographic, what does our community look like compared to maybe other communities that are being served in the J.D. Power segment that we're sitting in.
Julie, you provided some breakdown of some of the numbers. On the overall graph you showed, the numbers on price specifically were relatively low compared to the other categories, which I find interesting because we are also at 11 to 14% below the regional average on price. So, so price is lower than power reliability, billing, customer service. How do we stack up on price specifically compared to others? Do all utilities end up low in this category relative to their other categories? Or?
I think I'm going to have Al Wunderlich come speak to that.
So, it's a different set of utilities, by the way. Kentucky is not in the same one, for example.
It's perception. Yeah, Kentucky is in the Midwest. But it's
not where we do our price comparison.
No, not in our SPP.
Correct.
Not within our
Yeah.
SPP,
No, I
no.
get you in the Northwest Central. Got it. Yep.
Yeah, I'm
That's
Al
correct.
Wunderlich. I manage the market research department. Historically, every year in J.D. Power results, there was a hierarchy. Power quality and reliability scores tend to be pretty high. Price is usually the lowest rated factor. And again, it's something people don't enjoy. But you'll usually see, of all, in a relative sense, price is usually the lowest scoring factor. For the first 13 years we were in the study, we were first in most of the factors. And we've seen some slippage in that over the last few years. But even with price being a low-rated factor, OPPD was still scoring pretty high relative to the rest of the Midwest midsize.
Yeah, and I guess the other half of the question was, I mean, is this an issue specific to us, or a perception issue specific to us, or a perception issue specific to utilities in general, or
On the price factor?
Mm-hmm.
Yeah, and it's interesting, you talk about perception and reality. We've done some analysis where you look at what the customer reports their bill to be and how they rate price. And for the most part, they correlate, but there's a couple of utilities where they're very low-cost utilities, but their price ratings are low. And then there's a couple that are the inverse, and you wonder, what's that utility communicating that the others aren't, because perception and reality don't match up.
So I think if you go back to these attributes too, that are under the price category, so it's not just the monthly cost of service, but it's the ease of understanding the pricing. So some of those components you see in our SD2. The efforts for us to help them manage their usage, that's one that we scored lower. So we're working on how do we get energy efficiency tips out there to our customers more frequently.
So, a couple of comments. Don't know if they're right or not. The HVAC background tells me that one measure of that you can always count on that has customer dissatisfaction for building occupants is temperature. That'll grade lowest. So I'm guessing price is similar to that. Among any population, there will be a higher level of dissatisfaction. The other thing, though, I mean, it goes back to my earlier question. I see under corporate citizenship, we've got involvement in local charities. That actually comes up in a different SD for us. But it's interesting. What I'd like to see under price, corporate citizenship, and communications, those three areas where we score lower, is how we compare to other utilities. So when you have that, I would certainly like to see what's going on there.
Okay.
But yeah, it's a very rich set of data. I think it's pretty cool.
And as you can see, we've added a lot more.
There's a lot of stuff.
Right.
than we have in the past.
Well, so think about what Lisa and the team has done just in the last quarter with some of the outreach that we did in the 6 weeks of kind of telling the story through OPPD and the work that we're doing. And did that have any indication on any of the uptick that we see? Because prior to that, we have not done communication on, I mean, we do it through web, we do it through kind of interviews and normal press release and some of that, but not through media, not through TV. Exactly, not through a very intentional communication about where we are relative to price or service or whatever that may be. And so we have not done that over the last several years. So you may see some things pop up that we begin to talk about that more readily.
And we're using this data for our messaging because we know those are the triggers that will help that satisfaction. So.
Well, I'm happy to hear that you're using data to drive your actions.
Touche.
Can you repeat that?
No, sorry.
Yeah, once is enough, right? That's right.
Yeah. Okay, so now we're going to turn to the business. And as I mentioned, we're in this transition stage. So this slide is a little bit busy because we have two different reporting mechanisms. To the left of the black bar is our JD Power results, and to the right is our Escalent. So one of the challenges that we have on the business side, and maybe one of the reasons we hadn't reported it historically, was about the size of the sample. And so we're still challenged, and we're working with our vendor, even as we've transitioned to this new vendor, to get up to getting at least 400 surveys across an annual period for us to believe that it's a statistically valid sample to compare against other utilities and against our own performance from year to year. So again, you can see on the quartile ranking across the bottom, with the JD Power, we were consistently rated in the first quartile, but again, you see that gap closing between the average and the OPPD score. And then when you move to the Escalent, we're still fitting in that range between, you know, the 755, 760 score range that we saw in the JD Power, because it's also on a 1,000-point scale. But for the first half of 2019, we are sitting right above the average. So we're right at the average. Al and his team have been working with Escalent to help us to get more data. And so we will be providing more information to you as we get additional information on this business survey. One of the, an awareness factor I think that's come out of the work that we have done so far on this is about being able to, it goes back to the awareness. What programs and services do we offer? How do we help them manage their bill? We're hearing that through some focus groups that we're doing with our C&I customers. So I think you'll see some work that will be taking place in that regard. And on the Escalent, their factors are a little bit different, but still, I'll say they group them a little bit differently, but they still hit on the power quality, reliability, communications, corporate citizenship, the brand trust, the service interactions, that type of thing, and the pricing. So we'll have more information on this in the coming months and then for the report out next year. So are there any questions then on this one before we move into the other aspects of the SD5 reporting? Okay, so just wanted to provide an update of the different ways that we have been prioritizing our investments and the work that we're doing, whether it's a strategic initiative, whether it is an operational efficiency. We are using the voice of the customer. So this just gives you a flavor of some of the things that we've done. So of course you've seen about community solar and the EV, the electric vehicles. We're using it to understand what proactive messaging customers want and how they want that, text or phone. A couple to note, demand side management, energy efficiency, commercial market segmentation, those are some efforts that are underway. So we've got the surveying done, and you'll be seeing some information about those coming up. DSM, I believe we're going to be reporting out on that item next month with the SD7. And then the commercial market segmentation, I would imagine you'll hear more about some work we're doing with our commercial and industrial customer service strategy in the last quarter of this year. In interactive voice response enhancements, we've made some enhancements to that over the course of the year, and certainly we used our customers' input on how we went about that process.
People do not like this, people.
In terms of interacting respectfully, we have our OPPD core values about honoring our community, passion to serve, and caring about one another that are guiding our entire organization on how we work with our customers. And we have some other mechanisms that we have in place just to ensure that through our processes and through our performance that we are living up to that, and that if we aren't, we're coaching folks in accordingly. So we have a robust call monitoring program that focuses on the calls taken into the call center and walk-in transactions as well. And we're focused on, the quality of the interaction, the accuracy, the professionalism, and the efficiency in which they're performing. And we provide them feedback if we feel that they're not meeting what our standards are. From a customer survey perspective, I talked about that. That's the transaction and the journey surveys. And so we, through that process, it is after an interaction. So if a customer indicates that they were not satisfied with the service or the rep, then we get an alert on that, and the customer care management team is immediately reaching out to those customers to follow up on that interaction to rectify the situation. The customer service training, again, we are going through a consistent process with our training. We're always enhancing the information that we provide to our reps to help them enhance their skills. And we've launched a new computer-based training during the past year, and we're going to be focusing on some classroom work in this upcoming year.
Julie, you mentioned the customer service surveys that occur after an interaction with customer service. Do we do anything surveying those people that reach out to board senior management through the contact form as a follow-up?
We have not.
Okay. Just curious.
Not specifically.
However, you do give us a feedback on that. And heads up to Nitty Gambier, because he gets the most difficult
Yes,
ones,
he
by the
does,
way.
and he does a great job of resolving.
He does a great job of reaching out and communicating back to us. But I don't know if that would be a good idea.
Yeah, I don't know if it's a
Yeah.
good idea either.
I think
curious.
what I would say we do with that is kind of monitor for what the trends are, which is what I am going to
Sure.
mention that on this slide, because that is one of the ways that folks, if they feel they're not being treated fairly, then they can go to OPPD.com. They can make a call into the call center as
Yeah.
well, right?
Yeah.
There's a variety of avenues that they can reach out to board members to say, hey, I don't feel I've been treated fairly. And so we go through a process to evaluate the situation, resolve the issue with the customer. But I'm skipping ahead. In that area, I think the trends that we saw over the past 12 months, a lot of the reports were about streetlights. So we had a longer than average response time earlier in the year, or I'll say late last year, early this year, with getting streetlights repaired. I think we had a lot of a lot more dead at base or knocked down type that take a longer period of time to get restored. But we have seen that clean up, and we don't get as many of them as we were getting because of the work that Steve Fanslaw and John Buckley and Energy Delivery and on Troy's team have done to really get more contractors and work focused on getting those buckets cleaned up and making sure we're addressing. I think the other thing that we see is the proactive communications, whether it's an outage or system improvement jobs. It just speaks to customers' expectations. If you're doing something in my neighborhood, tell me about it. And I want to know about it before it happens, if at all possible. So I think those are the trends that we've picked up on in looking at those.
Yeah, it's going to be interesting to see the trends as we get the LED lights, street lights in, to see if that goes down, because for the past how many years, every fall, I get the phone calls. And sometimes I'm making those phone calls because I'm the early walk. Yeah,
Right.
It'd be interesting to get those LED lights in.
Yeah. So
I know.
we are, most definitely. So on a couple things that we've done, I added to the top of the list that are really they're proactive measures, ideally, so that we don't have customers coming in saying that they weren't treated fairly. And this is going and looking really at the customer expectations in a different way. So customer personas were something that were developed when we did our customer experience, and it kind of, again, it puts you in the mind of the customer and able to empathize with where they are and what are they expecting from the utility and what are the challenges that we're facing. So being able to understand the differing expectations across a variety of different customer personas, we're better able to design our processes and our policies. And so you've seen some of the work that we've done there. The new roles with our customer service business unit, my organization went through the accountable management system, we really looked at what are the roles that we need for the future. And so I talked a little bit about our C&I initiative. We're going to be adding some account executives that are focused on I'll say the non-large industrial type customers. And so you'll learn more about that later. But we've also added Britton Gable, the product specialist who is focused on our income qualified low income type programs, and he's just been doing a fantastic job to help us round up how can we utilize the resources that we have and others have to provide a better experience for these customers. The escalation options, of course, I've talked about OPPD.com, but if a customer is challenged with, we'll say, the first rep that they get when they're having a conversation with the call center, they can go to an account supervisor. That's typically who the board contacts go to review and reach out to the customer to see what we can do to resolve it. The dispute process on our disconnect notice, that is based off of a state statute, but every disconnect notice that goes out really, it provides a notification that a customer can schedule a conference with OPPD, and so that is a very, very rare incident that occurs. We typically are able to resolve the bill payment issues or the age debt challenges in a different way besides coming to a conference. The other item I wanted to hit on is just reviewing some of the trends that we've provided updates on through the course of the year. We do our annual credit and collections in March. We've provided some updates through various ways on the customer experience and the journeys that we've done. Our income qualified, you've heard about those programs at the May board meeting, community solar, LED streetlight activities, and then our work in the electric vehicle area. So with that, it brings us to the recommendation. And so in the pre-committee meeting, the board members discussed, with the downward trend, what does that look like? We went back, we provided the wave data to have, provide some assurance that it isn't continuing to go down. It has popped back up. And so, considering that the SD is about the overall customer satisfaction rating, how we're performing against those other accountabilities that we had, with the SD, I believe, and I'm going to turn it back over to Director Moody, that the recommendation would be that we are sufficiently in compliance with the SD.
Yeah, we did have a good brief discussion about whether or not, and for those of you that haven't been through the full process before, we typically find that we're sufficiently in compliance with a directive. I think there have been only a couple situations in my brief tenure where I don't remember what the language is, but working towards compliance or something like that, so we're a little bit below. I think in this case, as we kind of discussed it, especially now that we've seen the wave data, for those of you that was not something we saw before, and we asked Julie to bring that back. That was really helpful to see, okay, that was a dip, and now in fact we're at a much higher level. It does reinforce to me that we're sufficiently in compliance, especially when you consider the breadth of everything that we're doing and all of the other accountabilities. You started off by saying, pleased but not satisfied. There's work to do, to be sure, but in my view, the dip does not warrant us making a statement that is anything below what sufficiently in compliance is. So, but I'd welcome a conversation if anybody has different thoughts.
And is this consent item?
Yes, it is a consent.
Do you want to keep it there?
Yeah.
I think so.
I think so too.
Gives the opportunity to push buttons. To come in.
We talked a little bit about the
We can do that at the consent.
Yeah, that's right. Go ahead, Eric.
We have the overall lower number, but that more specific data about the rebound, I think that shows that there was an aberration down and that we are performing well overall, and so sufficiently compliant. Yeah, I feel that's appropriate.
You don't want to bring in any external factors of last fall.
It'll be interesting to see if we have the same
If it happens
situation next
again,
year.
I hope not, but it tends to do that lately. Yeah.
I just have one comment about this. In the last APPA magazine, customer service begins at home tips from the top of the class highlighted OPPD and SMUD as being top performers in customer service, and I just wanted to congratulate Julie's team on that, and again, yeah, kudos to.
So it also, I think, refers to SRP, Salt River Project in Arizona, and so SMUD, which is Sacramento Municipal Utilities, are a couple of very high-performing public utilities, and so we do work closely with them through our large Public Power Council customer service team to share ideas, understand what they're doing, and how we can improve our service here at OPPD.
So, yeah, neither of them would be in the Midwest Mid-South.
No.
They are not.
Yeah, but I
But they
think,
would.
yeah, I think organizations such as this, communities, educational institutions, academic, have peer groups, and then they also have aspirational peer
Right.
groups. And so it's good to triangulate there. Good for you.
Yes.
Okay, any last comments on SD5? All right, that's it for PI committee.
Thank you very much. Appreciate it. A lot of work done in that committee. Next, we have governance. Mr. Kavanaugh.
The governance committee met on Tuesday, August 6th. We discussed the following items. We had a briefing on the Nebraska City Unit 1 turbine reliability, as did the other directors as well. We also discussed, which we'll visit again here today, the BL3, the board internal auditor relationship policy. And again, we'll be discussing this a little bit later. And then we also firmed up the final plans on the board governance workshop, which is going to be held on Thursday, August 29th, as you're aware. And as contemplated, the morning session will be open to the public to focus on OPPD strategic direction policies. Then the afternoon session will be a private workshop for the board members to focus on non-OPPD business, specifically governance practices. Do all of the directors have the agenda yet for that, or is it just our committee? Do we know more?
No.
Now they're coming out
Scott.
shortly.
Yeah.
We, after that meeting, the governance committee finalized the agenda. Listeners and I are in the process of getting an email to go out to everybody.
Okay.
It will have the agenda. It'll also have a survey, so that will help really focus the morning based upon kind of where the priority areas are that service for the board. Director Yoder, you alluded to earlier, for example, that SD7 would likely be one of those discussed. I imagine that would show up through the course of the survey, but if there's other things in addition to SD7, what are those points and how can we prioritize the morning time to make sure we address all of them, or at least as many of them as possible? So that's what the survey will help do.
Sure.
Just a logistical question, where is the workshop?
Yeah, great. It'll be at UNO at the Community Engagement Center.
And directions for parking and everything.
Yeah, they're going to be,
Exactly.
are they going to be able to have a
kind of
place for parking for us?
packet that will go out to everyone here shortly.
You could do that.
Bus
A
number
little
2.
tough from Cass County,
The number
but
2
okay.
bus for me.
And if we get any tickets, we can throw them away because the students.
I can take the number 2 bus.
Scott, do you think this is appropriate justification to request getting out of jury duty?
Oh, do you have
Good luck.
So.
Oh, you might have it. Oh, no.
I'll let you know how that goes. But
I'll trade you.
Oh, no.
Oh, we've all been to jury
my other
duty.
civic duty.
I will leave that.
You get
very
excused
capable.
anyway.
I will leave that to the judiciary system to provide advice.
Did you apply?
Or perhaps Steve has a comment.
I might be able, call me if you have questions about that.
Yeah, have him do it for you. Have him do it for you.
Get out, frankly.
Yeah, have you just change the
But
date.
we've been through it a few times.
That's what I was going to try to say.
Have him do it for you.
Okay, so for today, if we got Eric's jury duty thing worked out, we have 2 items to go over. Mark, did you want to do yours first or Scott? Okay. Mo's going to go ahead and give us the results of our recent engagement survey.
Okay, so our engagement survey at OPPD is called the Best Place to Work for You survey. We administered the survey in June, from the 15th through the 30th this year. Our previous administrations have been in 2014, 2016, 2017, and 2018. Quantum Workplace is our partner for the survey administration and results, and Aaron Brown, our Senior Insights Analyst with Quantum, is here to present our overall results. Aaron?
Thank you all for having me today. I hope to keep this short, probably about 20, 25 minutes, if that is doable for you guys all. So before we get into the actual data points, just a reminder for everyone in the room, this is how we define engagement at Quantum Workplace. You've probably seen a similar definition if you've read any journal articles on this, but we define it as the strength of connection that employees have towards the work, the team, and the organization. So if you love what you do, love who you do it with, and ultimately who you do it for, that creates a more engaged employee in the long run. A few data points from last year. So in 2018, we specifically set out to look at 3 things: recognition perceptions, perceptions of feeling valued, and perceptions of accountability. All 3 of those areas have significantly improved in the last calendar year. If I contribute to OPPD's success, I know I will get recognized or be recognized, improved by more than 11% in 2018 to 2019. The CEO VP team values people as their most important resource, improved by 13%. And in my immediate work group, steps are taken to deal with a poor performer, improved by about 7%. So these are the 3 areas that we kind of targeted and ID'd as key opportunities for improvement. They've all seen significant improvement over the last calendar year. A couple other key metrics for you to consider. Response rate is holding steady at about 80%. In the past years, we've gone between 78, 69, 78, back up to 78.9%. So response rate overall is very strong. Another key metric that got a little smudged, I think, when we merged the slides here is overall score. This is the composite average across all the questions that are on the survey. So if you think about this simply, if you have one question and you agree to that question on a 6-point scale, so from strongly disagree as a 1 to strongly agree as a 6, and you agree to that, your average score would be an 83.33 out of 100. So your top score is 100, your lowest score technically is a 16, 17. We're at 79.8 in 2019. In the past years, we've hovered around 77, 74. So we've seen consistent improvement over the past 2 surveys, going from 74 to 79.8. Ideal state, ideal goal, if we want to be among the best places to work in Omaha, be competitive in that market, would be about an 85 overall score. So we're trending slightly below that, but we are moving in the right direction. Any questions before I go on from this slide? All right. Lastly, one other key metric that we have is our employee profile distribution. So as you take the survey, each person that responds is bucketed into one of 4 areas. You can either be highly engaged, moderately engaged, barely engaged, or disengaged. Highly engaged individual throughout the survey is responding between a 5 and a 6. So on average, they're agreeing or strongly agreeing throughout the entire survey. So they really love what they do, who they do it with, who they do it for. They have good pay benefits. They have good growth and development opportunities. They have a really good manager. All those things are kind of going in the right direction for them. Moderately engaged person is between a 4 and a 5, so they're leaning favorably, they're leaning positively. A lot of good things going well for them, but maybe 1 or 2 things is holding them back from being fully engaged in the organization. This could be simple things of, I love what I do, but I don't see a future for me. You know, maybe I feel like I've topped out in the organization. There's no more development for me to have. Or I really enjoy my coworkers, but my manager is really hard on me. I don't get along with them. So that's affecting my engagement. And then your barely engaged, your disengaged group, the yellow and red, those are the individuals with the more negative perception. Disengaged, you can kind of think as not exactly, kind of going along with the flow. That's how we would kind of describe them. They're kind of just there. They may not be actually actively working against the organization, but they're probably not doing the best that they could. Whereas a disengaged person not only is vocal with their concerns, vocal with their disengagement, but is also probably actively working against the people that they're around. They might be disengaging others in a sense. Thankfully, we have about 10 to 14% that are between barely engaged and disengaged. So a very small grouping. Overall, about 86% of our employees are either highly engaged or moderately engaged. You can see there at the bottom how it compares to the different benchmarks. We have other utilities. These are utilities across the nation. So a couple examples here would be San Francisco Public Utilities, DC Water, South Jersey Industries, Middle Tennessee. Those all bucket into that utilities group. National, same size, so other organizations between 1,000 and 5,000 employees. And then national, same size, top quartile, the most engaged organizations that we work with. Unfortunately, there's really no utilities companies that fall into that top quartile. So utilities, manufacturing, construction, government agencies historically have been on the lower end of engagement. And then the final major metric before we start getting into the nuts and bolts of the survey, category trends from this year to last year. You can see that in 2018 is the light gray boxes, 2019 favorability is the light blue boxes. Every single category this year compared to last year has increased in favorability. So that means more people are agreeing or strongly agreeing than they did last year on these areas. There's a full breakout. I'm not sure if you all have the full presentation in your decks, but there's a full breakout of every single item that goes into each category. So there's over 50 items, a lot of categories to go through. We won't go through all of them today, but each category on the survey has improved in favorability. Safety, manager effectiveness, teamwork, the most favorable. Excellence, integrity, survey effectiveness, which is really how people expect you to follow up to the survey. Those are among the least favorable areas. So when we think about measuring engagement and acting on engagement, there's a couple of ways that we look at the data points. Engagement outcomes that you see on this slide, these are really the core diagnostics of how we measure engagement for an employee. So we want them to be somebody that always thinks of ways to do their job better. We want them to be connected to their coworkers, connected to the work. We want them to be an advocate for us as a great place to work. These are not things, though, that we can directly act on. I can't walk up to anyone in the room today and say, hey, I need you to, when you leave the room today, go talk to 5 friends and tell them how great OPPD is as a place to work. You might do that on your own, but I can't ask you to do that. It's not something that naturally is something that we can act on. But these are things that we want from our employees. We want them to be thinking or in this mindset if they're going to be an engaged employee. You can see the favorability in the middle column here, 2019, ranges from 67 to 93% favorable. Ideal state is that all 4 of these are at or above 75% favorable. That would get us to that mark of being, one of those best places to work in Omaha. So we do have some advocacy and some retention opportunities from our employees. Those are trending below where we'd like them to be. But they've all improved over the last 3 years. You can see the trends dating back to 2016, a lot of strong improvement. Notice there from 2017 to 2019, advocacy has improved by 17%. So in 2017, just 50% of our employees would advocate for us as a great place to work. Now it's at 67%. So a tremendous improvement in just 2 years. Next, we look at the drivers of engagement. So the outcomes are the diagnostics. You can think of the drivers as the prescription for action. What are the areas that we need to focus on or continue to work on in order to improve or maintain engagement within OPPD? There's 10 items here. We draw this from a correlation analysis on the survey results. So they're specific to OPPD, but a lot of these areas are things that other companies that we work with are also dealing with. Career outlook, feeling valued, future outlook. These are all common drivers of engagement for a lot of organizations. So for career outlook, employees right now, they are connected to the job that they're doing. 71% say, yes, I have the opportunity to do what I do best every day. However, just 52% know how they fit into the organization's future plans. This could be simple things like having that one-on-one conversation with your manager on an annual or quarterly basis to understand where you fit in the team dynamic. It could be longer-term things. We saw some comments this year from employees talking about renewable energies and what OPPD's answer is to that. How will they play in that space? And what will that mean for my job, my role, my future within the company? Some people just don't know.
If I
Yes.
can add, this also has to do, we're decommissioning a plant right now, too. So,
And we made the announcement on the decarbonization.
and the decarbonization. The day before you open it up?
10 days.
10 days.
On June 5th, we had the town hall with all of our employees to kind of talk about all of our strategic initiatives, and then what
Yeah.
the board heard in June with Mary on the decarbonization strategy pathway. And then on the 15th, we opened the survey up to employees.
That's fresh.
So what's the implication?
Well, I think the implication is that they know corporately we're looking at a decarbonization strategy. And so immediately it begs the question, what does that mean?
Do I have a job?
Right, what does that mean?
In the future.
Yeah.
So
Do I have a job?
I think then the follow-up is then we have to communicate.
Yeah, absolutely.
Right, and that will come. And so those numbers should not go down if we communicate this well.
I think it's human nature, whether it changes for the good or for the worse, it creates some concern for employees. That's just the way it's gonna be, whether it's for good or bad or whatever.
Well, I think to me, the story here is all of these went up from the previous year. So
That makes it even more
the manner in which we're communicating and the manner in which we're engaging employees around this topic, I think is positive. And I think that's the
Yes,
real
that's the
story
positive.
around this. But as we're going through this transformation, whether it's Fort Cavanagh Nuclear Station, other strategic initiative work that we're doing, employees are questioning what does this look like and what does it mean to me, and in this case I think we are answering that in the best way that we can. So I think it's positive, actually.
It is very, I agree, it is positive considering the situation that they were just given, okay, in the next 18 months, we're gonna have a decarbonization study. You can see the fear that you have, or the uncertainty you have with those employees about what's going on. And, again, I thank Mart for being on top of all this, and Marion on top of this. And the ability, you can see our future, that we have to continue to work on this and communicate with us.
Well, as Lisa so often says, language is important, words matter. I think rather than broad brush, all employees are fearful. I think many of them are excited about opportunities
Sure
and
they
the
are.
challenges ahead.
Yes, they are, but there's quite a few of them that don't feel that way, based on data.
Can you remind us again, I'm sorry, the numbers that we're seeing here, on, I know how to fit into OPPD's future plans. It says 52, 20, that would be delta from 2018, meaning that there was a 10% increase from 18 to 19.
Yes, correct.
So that the number in 18 would have been 40.
Yeah, 43 or
43.
44.
So if you continue tracking back, I guess I'm just tracking backwards further than that. So in 2017, it was another 17% below the 43.
The deltas are 1 year, 2 year delta, and a 3 year delta. So in 2016 to 2017, you'll notice that it looks like we kind of went down a little bit. So we're tracking back up the past 2 years. Yeah. So 2016 was kind of a higher year than 2017. So we've gone down and then kind of up.
Okay.
What was the plan?
That was a Fort Calhoun.
Fort Calhoun, 2017.
On the slide.
Nobody was aware what's going to go on.
The one that really sticks out to me, at least from the work that we do with a lot of customers throughout the U.S., in under feeling valued, recognition is a big one for a lot of organizations. A lot of focus is always on that. And I think it continues to be a focus for OPPD. It's at 55%. That's not great by any means. We'd like that to be at 65, 75%. But the one that really sticks out for me is I believe the results of this survey will be used to make OPPD a better place to work. Now, the results that we are seeing don't really jive with that data point. You know, we're seeing consistent improvement. Engagement is going up, so people are experiencing a better workplace, but they're just not connecting it back to the actual work that's been done. So some comments that we saw from employees were things such simply as, I want to see what the executive's action plan looks like. What are they committing to do? We know what our team is doing, or what my manager's doing, or what my team's doing, but what are the people in the room going to do? You know, what is their specific action plan? And so what we ask, you know, all of our customers is, you know, when you do make changes, when you do make improvements and upgrades based on the results that you see in the data, is that you tie it back to those data points and tie it back to that feedback that you receive. Say, hey, we know that you have maybe some concerns or questions even about decarbonization efforts. We heard that from you in the employee engagement feedback. We heard that from you from town halls. We heard that from you in one-on-one discussions. Here's what we're doing about it. Here's how we're looking into that. Here's the talking points, the education we're giving to your managers, your leaders, those types of things. So definitely connect it back to the work that we're doing, because we're seeing results improve. Employees just aren't connecting those dots.
So is the thought there that if someone taking the survey said no to that statement, then maybe they're not filling out this survey in the most authentic way because they don't think it's going to matter?
That could play a role. What we do see is that when people respond negatively to those types of items about the impact that the survey is having or the impact they think their feedback's having, is that it does negatively impact their engagement over time. So these are people that are probably, maybe they start off moderately engaged and then move into that barely engaged bucket, or they start off highly engaged. Normally they don't, you know, make wide adjustments going from highly engaged to disengaged overnight, but we do typically see that over time their trust in the process declines and deteriorates, and it affects kind of the work around them that they're doing.
Thank you.
Future outlook and career outlook opportunities, those kind of mirror each other in terms of, if I don't know what how I fit into the organization's future plan, I'm probably not too confident in what's the plan for OPPD's future success, because I don't know what my position is going to be. So typically what we see is when improvement is made in one of those areas, specifically the career outlook aspects of knowing where my position is going to be and where it's going to head, my confidence then in the organization goes up considerably.
However, you look at the improvement from 2016 in there, that's pretty amazing.
Yeah, so we are trending tremendously in the right direction. If we want to put that pillar, though, at that best places to work, let's get to that 85 mark, that overall score, that composite average. We need these numbers definitely to be in the 60s, probably the 70s is the ideal state. Specifically, we wanted to look at how you compare to the top quartile, so the most engaged organizations that are similar size to you. Again, know that they're not in the utility space, they're not in similar space, they're all over the industry board. But these are the 5 items where we fall or are apart from the most. We're 23% less likely than top quartile organizations to believe that the CEO and VP team is open, honest, and they'll do what they say. So that integrity, honesty aspect. 18% less likely to say that they trust in leadership to set the right strategy. Sometimes that's just knowing what the strategy is. Sometimes that's knowing how we're going to respond to things. Rumors fly fast in a lot of organizations, and sometimes leadership doesn't keep in front of those, or sometimes they don't even know that those are happening. But employees are going to make their own assessments based on the information that they have. So knowing that there's always things that we can do here, I think a lot of employees appreciate the town halls that are happening, appreciate the discussions that are happening. But the thing that we see probably most effective here is making sure that we're dedicating time to the middle manager and making sure that they're prepared to talk to some of these things. Because sometimes they're just as in the dark as their employees, and so their default response could be, I don't know, it wasn't my decision, I wasn't in the room, I wasn't asked, so I'm finding out when you are. And that can only breed that more uncertainty or disenchantment. I apologize for the slides. They're kind of going all over the place with the settings here. But top item trends, this is good news. These are the 10 most improved items from 2018 to 2019. 55 out of 57 items improved in favorability. The 2 items that declined by less than 1%, so not really a change at all. But these items are moving up significantly, over 8%. If you just do the quick math on it, if we just say 1,000 people, that's 80 people that have a different perception this year compared to last year. So definitely moving in the right direction. And the nice thing is that a lot of those do relate to that CEO, VP team. So even though we still have a wide gap to close, the trust in leadership, trust in management is improving.
You know what's interesting in that, and I mentioned it to Tim, and I'm going to verbalize it here, is you wonder if we had something about trust in the board of directors. Because I think, this is sort of a reflection also on our actions as far as the board of directors. And I wonder if there are any other companies probably don't do that, do they?
I've seen some break it down, and they'll ask, a 3-pronged question to how do you trust CEO, executive team, how do you trust your middle managers, how do you trust your direct manager, and how do you trust your team? So actually 4-pronged. The results typically improve the closer you get to that person. So I trust my team more than I trust my manager, more than I trust my middle, etc.
So they trust us less, by the way. Just so we know.
I think it's
but we're improving.
Well,
I think this is a reflection on us too, I guess is what I'm saying.
The question is, what do you do with that information once you have the answer? How would you change it one way or the other? What is the nuance? What is the expectation for how that happens? And then what's the intervention you would do?
Well, I think the expectations might be actually what we're discussing in our retreat. Both the strategic directors and our leadership behaviors. That's what we're going to sort of be working on.
That's why you do surveys.
I'm sorry, on the last one. Maybe I won't find it. I guess so there was one about taking action on the results of the survey. I think was the previous slide. That one seems pretty straightforward. I mean, like, it feels like there's a direct action step that we can carry out on that one. Is that a part of the plan?
Yeah,
it's just to say.
It's all about communication.
And has this been presented to the board in the past?
Yes.
Yeah.
It
Yes.
has?
Oh, yeah.
Okay. So the first year, so
And I think what you'll see, and what we have done consistently is that each department, each division, each business unit, senior team will have some very clear deliverables that are taking action to the survey. I think the point that has been made is, do we tie those changes and actions to the results of the survey? Do we say, we're doing this because? I think when we opened up the strategic initiative conversation on June 5th, I very clearly said is that employees want to be more involved in what's going on and understanding the strategy of the organization. So we are now sharing with you, before we share publicly with the board this next month, the strategic initiatives, and it's because of the feedback that we've gotten from the survey. So how do you tie that very clearly, intentionally, with the survey feedback that you've gotten? Some of the work we're doing on recognition, that a small team is made to the senior management team, and then on accountability too, is going to be, hey, as we do these things, it's because of the feedback that you've given us around how and what are the tools to recognize people in the organization. So we just got to be much more intentional about it.
The last overall data point, these are items that have seen tremendous improvement over the past 4 surveys. They've all improved by 25% or more dating back to 2016. So we've seen some tremendous improvements here. A lot of these items relate to communication. My supervisor makes the effort to follow up on decisions. There's open and honest two-way communication. When we make changes, my supervisor explains why. And then there's effective communication between departments. So a lot of communication efforts here. So the nice thing though, or the one thing to take note of here, a lot of localized communication between supervisor or between teams. The perceptions of leaders are improving, but not quite as fast as these areas. All right, last few slides here, and then open it up for questions or discussion. Just some group comparisons. So looking across a few demographics, we're not going to get into all of them today. There's more in the appendix if needed, or even if you have access to the reporting site, there's a bunch more to look at. But just wanted to look across favorability across locations. So again, this is the percent of people that agree or strongly agree, or percent of responses that are agree or strongly agree. So you have Sarpy County Station on the far left, all the way to North Omaha Station on the far right. Trending between about 60%, North Omaha Station slightly under that, Sarpy County just over 80%. The one nice thing here is each of the groups has seen an improvement. A couple that are kind of staying pat right at their mark, their prior year mark, but most of these locations have seen an improvement in favorability over the past year. And even if you look at like Energy Plaza, about a 4% improvement, 3% improvement, that's pretty significant for a group that size, over 500. Typically, the largest ones are the most stable year to year. The more trends that you'll see are the 5, 10, 15 people locations. If we divide it out by pay group, the obvious story here is that there is a direct difference between perceptions of exempt or non-union staff and union staff. So this is a trend that we see not only at OPPD, but most organizations that we work with that have a union presence. Union employees tend to be less engaged, less favorable than hourly or non-union employees or salaried employees.
Is the delta between our unions and salary the same as what you see outside?
Yeah, it's about the same, yeah.
Not really.
Each of these groups, though, they've improved at least. So going on the far right, over all the way to part-time employees, everyone has moved up in the right direction. The things that do usually, if we look specifically at union employees, they are more critical of leadership, more critical of management, less trusting of communication, those types of things. And so here's how those 5 groups break out across those 10 drivers of engagement. Any area that's below 50% is highlighted in red. The dark blue, those most favorable. So part-time employees are pretty happy for the most part, except for they don't know how they fit the future plans. That's understandably so. Being a part-time status, you may not know what your future holds. But for the most part, your enjoyment, your experience in the workplace is pretty positive. Whereas union employees, much more negative across most of the areas on the survey.
This is a very small group.
All right, last couple slides here. Just an overall kind of summary of what we talked about so far today. In terms of focus areas, the 2 that we're going to really point out this year, looking at that perception of future success and where I fit in to that future success. So simply knowing that a decarbonization effort is happening, that's going to cause a lot of uncertainty for an employee. We need to make sure the manager, the team is having those one-on-one conversations with that employee throughout the year, prepping for, reacting to, planning for those types of questions that employees naturally have. If they're not meeting, at least on a quarterly basis, we need to make sure that's happening so that they don't feel left out in the cold when decisions are made. And then also just related to the survey follow-up piece, just 56% say, yeah, I believe our executive team is open, honest, and do what they say. This really does relate right back to that survey of knowing what's happening with the data. I don't think people think there's low integrity in the room, or there's a high distrust in the room, or honesty is low in the room. It's more so, I don't know. I'm not sure. I don't know how to connect to those people sometimes. I see them as other than me. They are in a taller building. They're in a bigger room. They're in a nicer car. I see them as different from me, so I'm not sure how to connect. Whereas the person next to me that I'm working with every day out in the field maybe, I connect with them more. I know more about their personal life. I know more about their wants, their needs, their desires, the things that they're working towards in their life, the things that they're going through in their life. So I naturally have that stronger connection with them. So those are really the two areas, the future fit, and then making sure that employees know what is happening with the survey results and know and can kind of break down those barriers between leadership, middle managers, and employees. And then lastly, this is, if you were here last year for this is the same slide that I likely showed. The thing that I always want to reiterate before I wrap one of these up is that it's not just HR's responsibility. It's not just Mart and Angela that are going to take this to the next level and make sure we get that Best Places to Work nomination. It's not just the people in the room. It's not just leadership. It's not just middle managers. Everyone has a responsibility to engagement, and employees especially need to come to the table. If they're going to gripe about something or be dissatisfied with something, it's not simply enough to kind of throw that opinion over the wall. It's they need to come over the wall with us and have that discussion, talk about possibilities, talk about what we can do, what we can't do. Middle managers play a gigantic role in this. They're going to be really the ones that are carrying your message out to the masses and making sure that what leadership is doing is well known to those on the front lines, the front individual contributing employees. So everyone has a part. And hopefully I kept time short, so if you guys have more on the agenda, you can get back to that, but I'll pause there for questions.
I've got a couple.
Sure.
First, I want to reemphasize the importance of this. We are successful only because our employees are engaged. So thank you for doing this work. I think it's exceptional. You don't need to go back to slide 9, but on slide 9, one of the questions is, everyone here is treated fairly regardless of race, gender, age, ethnic background, disability, sexual orientation, or other differences. You pulled it up because it was 16% below the same size top quartile. The only reason I wanted to bring it up is because, I can't help but wonder if we have demographic data to look at that question specifically to see where there might be potential hotspots of concern. Okay, so we've got that. All right. I think it's a great question. I really appreciate the fact that we ask it. It's similar to, I can bring my whole authentic self to work every day. Another great question that really gets to, are we treating people fairly regardless of who they are? So I'd be super curious to understand. We don't need to go into it now, but I'd love an offline conversation about it just to understand what's going on. Which leads me to my second last question. I can bring my whole authentic self to work every day was added in 2018. So I guess my question is, are there other questions that we're not asking that we should, in your perspective?
Yeah, no, that's a great question. We do try to review that content every year, so we don't make major changes year in and year out. We want to keep a stable set.
Sure.
But yeah, the things related to diversity and inclusion have just gone off tremendously for most organizations. Everyone is adding those types of items, so we've had those over the past couple of years. Specifically, though, to OPPD, I don't have any off the top of my head that we need to add. In fact, we probably want to start reducing because we are at 57 or 58 questions. We can probably get that down to 45, 46 and still feel good.
Okay, great.
I'd like to add, in fact, we talked about it earlier. 2 years ago, we added a couple questions about volunteering in the community and does my manager support that and so forth. And so we added that and added a policy that people would get time off in order to volunteer and so forth. So there were actions that were taken. So it's kind of timely information as well.
It's a good thing to point out.
On the by pay group, it says 15 on mine, but it's a couple from there. You had broken down by different union membership. With 31, any comments there? I mean, those results seem dramatically different than the other groups. Does anyone have a comment about what the driver is there?
They're all in my group. It's a small group to begin with.
I saw that.
22.
35, 40
You're machinist.
But I'll let Mary address what she thinks is going on there. This is the machinist union. So they're highly skilled craftsmen. And I believe, it's just me, I believe that as we went through AMS, that they didn't like the changes that were made there. And then when we brought up the decarbonization, they further didn't like that. The rest of the unions, 1483 and 763, have all said they want to go to 410s, so we've put them on 410s recently. So we're trying to make changes. 31 has just said we don't want any change, and basically that's kind of where they are. Mark and I had a discussion about what we're going to do about this, and I do think that we need to continue to work with them and bring them into the conversations and to see if we can make headway there. But I will tell you, they're pretty resistant to change.
You use an acronym there, I'm sorry. And it changed.
AMS, Accountable Management
Accountable
System.
management system.
And that is, did that have different implications for them? I mean, the results here, even compared to the other two unions, were
Not really. That didn't have a lot of implications for them. What really changed for them was their supervision. And so this is a reorganization, is what Accountable Management System is. And so what I would say is that they don't like the fact that we've changed their supervision.
Also, we kind of moved away from central maintenance, and that had some effect with some of that group anyway. But
Yeah, maybe a little bit. I think that's more, maybe a little bit, but they're more centered in the plants. We don't move them as much as we do, like the steam fitter mechanics and the electricians, because there's enough work to really keep the machinists there. But I will say, as we went through the outage earlier in the year, the machinist had a heavy load. And so you have to remember kind of what's going on in my organization, right? We reorganized in November. We went into a major outage in February. They were in outage from February, worked through blizzards, worked through flood, and we had 4 outages. We had Nebraska City 1, Nebraska City 2, North Omaha 4, and North Omaha 5. So they were in outage from February 20-something to June 10th. So long period of time. They worked a lot of overtime. And so that group, I think, in particular, just felt they were overworked. And I do believe that. I mean, there was a lot of work that went on.
They probably didn't feel as valued, but we do value them. We could not do any of those outages without those machinists.
Oh, no, I mean,
they are highly, highly skilled.
They're highly skilled,
personnel.
and we need
They're
not only
very,
them,
very
but the rest of the crews too, right? The steam fitter
Every
mechanics
one
and the
of them,
electricians
yeah.
and the INC technicians and the engineers, and I will tell you, my whole team was tired, right? Everybody came out of those outages tired, including the management team. So I just think that, it's a recognition of what they've been through.
Did the employees know, and in particular the machinists, know that their results would be reported
Yeah.
in a segregated way?
I hope so.
We have a group of 31, I'm sorry, a group of 22 that participated.
There's
I'm
about
a little hesitant to be totally honest sometimes.
There's 35 to 40 in the group, in the union, 31. Only 22 responded, so.
Well, 31 is the union number. Is that also the number of employees?
No, there's about 35 to 40 employees in that union.
Okay, that's close.
And of that, 22 responded, so a little over half.
So, we saw a lower response rate in that group than across the rest of the.
I would say for my group, that's normal. My union group typically has a lower response rate.
Yeah, just for clarification, 31 was at 63% response rate. The next lowest, 1483, 763, and part-time were at 72%. And then exempt employees are at 90% response rate. So.
Did you give us response rates in an earlier slide?
Yes.
Or each,
Just an
or
overall.
each group? I thought it was just
Yeah, that's,
overall, right?
yeah. It just shows the challenges that we have going forward. Since, we knew it would be a challenge mentioning the decarbonization study as far as communicating. And, I appreciate everyone's sensitivity toward that you recognize that challenge and, we'll continue to work with that. And hopefully it's just not yearly that these employees can come back and express their questions or whatever. And you do questions, you do.
Absolutely.
How often do we do those?
Yes, we do town halls every quarter, across the whole company, virtually done. And as well as Mary, and I'll do 3 face-to-face visits across the whole company this year. So.
I have all-hands meetings once a month at each location.
You have them once a month?
Once a month.
That's excellent. That didn't used to happen. No.
I just want to take a moment to acknowledge Angela Galloway, who is here. She's our senior OD consultant. Angela does all the work in preparing for the survey, administering the survey, sharing the results with the organization, and prompting action plans. So thank you very much for all you've done to make this happen. We will be putting together action plans across the organization, as Tim mentioned, at all levels. Those are due by the end of September. And then we plan to do a pulse survey with the organization to make sure that they have had the results shared with them in the October timeframe. Okay. Thank you.
Great. Thank you.
Thank you, Aaron.
Yep. Thank you all.
Okay. Our final item, and I'm going to have to leave probably before the discussion on this the presentation is over. It's a report. It's a little bit of housekeeping a bit on concerning our board internal auditor relationship under BL3. And Scott's going to go ahead and give us a report on what these changes are, and we will be voting on Thursday.
It'll be in the consent agenda, probably.
It is on the consent, okay.
Yeah.
Right.
Sounds good. Scott?
Thank you. And we saved the very best for last.
Yay, Scott.
This really is a housekeeping issue. I do want to provide just a little bit of context, though. Back in April 13th of 2000, the board passed resolution 4986, and what this resolution did was establish an audit subcommittee. And the purpose of the audit subcommittee was really to provide for the board through the subcommittee to provide oversight of the quality and integrity of accounting, auditing as it related to financial and reporting practices. And it was really in response to Sarbanes-Oxley. So auditing at that particular point in time was very focused on finance, and as a result, that subcommittee resided within finance. As audit function has expanded and grown over a number of years, since nearly 20 since then, audit has also grown to include many other aspects of the business beyond just finance. So really what we're acknowledging in BL3 is the reality of the change. At the time that BL3 was written, it reported to the CFO. It doesn't today. Tim has entrusted me with that function, really focused on governance and other governance functions. So it resides closely to risk and risk management, which is really a best practice anymore. So this policy reflects that, and the red lines are simply those changes. There's nothing substantive to that other than just that reflection. I think the other thing that's important to note, though, is that the audit subcommittee, as it was chartered, will continue to report to the finance committee and provide that oversight of the financial auditing related information to the finance committee. The governance committee accountability, as was outlined through the approved charters with this policy moving over to governance, is taking a look at that much broader corporate audit plan. So are we having the right kind of balance between finance and other types of audits? And what type of oversight is it that the board should have or would want to have in terms of some type of update or reporting against that entire audit plan? So just a little bit of context. I think it should be easy to go through the consent agenda item, and it really was a housekeeping item. So, any questions? Yes.
It's just 30 minutes here. That felt like 2. Is that
Yeah, why did they give you 30 minutes?
Others can learn from
Gold star for you, Scott.
Excellent.
I should have, yeah, there you go, high performing.
Already so tired.
Any questions? Okay, it's pretty uncontroversial or non-controversial. or both.
This mainly had to do with what we were changing at the beginning of the year.
Yeah.
You know, so.
So obviously, you have to vote on this on Thursday. So that concludes our report.
I just have one clean file.
What's
The
up?
Decommissioning Oversight Committee meeting has not been finalized. They're trying to move it to the first week of November. And when we finalize that, we'll be sure to put out a note to you and let you know when it is.
Cool.
I'm sorry, Mary, I didn't hear towards the first week.
They're trying to schedule it for the first week of November, but it's not been confirmed yet.
All right, thank you.
Okay. Thank you. We are adjourned.